Hello and welcome to day one of ET Future of Money Summit on economictimes.com. I'm Maloni Bhatt. ET Future of Money Summit is a forum for the most definitive conversations and information on how money is changing our lives, disrupting businesses, and broadening the scope for policy and regulations, all in this digital world. We have sector-focused tracks, interviews with CEOs, industry experts, and policy leaders as they put innovations around money under the lens and tell us what these changes and innovations mean for you and me. To begin with, we are thrilled to have with us Dr. Bhagwat Karad, Minister of State for Finance in the Government of India, as a keynote speaker. He shares his thoughts on India's road to financial inclusion. This will be followed by Sanjeev Sanyal, member of the Economic Advisory Council of the Prime Minister and Secretary to the Government of India. He highlights the changing face of money and its implications for the Indian economy. Want to know about central bank-backed digital currencies? Then do catch the keynote by author and Professor Ishwar Prasad. He's the Tolani Senior Professor of Trade and Policy at Cornell University. Don't miss our tracks on financial inclusion, women and money, digital assets, and blockchain. Also, two exciting fintech startups will speak about how their products are simplifying and improving financial access to different segments of people. But first, let's listen in to our keynote speaker, Dr. Bhagwat Karad, Minister of State for Finance in the Government of India.
Thank you for joining ET Future of Money Summit. Since this relates to money, let me just start with the question on financial inclusion. So Prime Minister Modi laid great emphasis on improving financial inclusion in his vision for India at 100. Now, we also find that the government has taken a lot of measures to deliver financial inclusion, be it in terms of enabling doorstep banking or giving the people tools to access that banking. So can you give us a sense of the impact these initiatives have had in terms of driving financial inclusion in India and also contributing to India's economic growth?
Since 2014, when Honorable Prime Minister taken the oath as a Prime Minister, since then the steps have been taken to increase the financial inclusion. First time in India, the financial inclusion has become a Jan Andolan. And to start with, there are different reforms in the banks. And with the reforms in the bank, the services and of the banks are improved and different schemes are announced by Honorable Prime Minister and Honorable Finance Minister of this country. This is the world largest financial inclusion, I can say. The first thing is the opening of the accounts of the poor people who are residing in the country, and that is the Prime Minister's Jan Dhan Yojana. Around 45 crore, more than that I will say, accounts have been opened in the Prime Minister Jan Dhan Yojana. Not only that, the Prime Minister Surya Yojana, which to begin with only 12 rupees per year one has to pay, and around 2 lakhs insurance was given, and this is around, the accounts are around 25 crore accounts. Recently, the 12 rupees are increased by the 20 rupees. Then the third most important thing is Prime Minister Jivan Jyoti Bima Yojana, where 8.8 crore accounts have been opened, and it is one of the important scheme for social scheme, giving insurance to the people. At the same time, I want to report here, in financial inclusion, different facilities are given for the different categories, different sectors of the community in India, particularly different schemes. One is the Prime Minister Street Vendors Yojana. The poor people who are working daily, they should be helped. So under the guidance of Honorable Prime Minister, our Finance Minister Srimati Nirmala Sitharaman ji has declared the Prime Minister Swanidhi Yojana, where rupees 10,000 are given without any collateral for the street vendors. And if he successfully does it, returns to the bank, then he will be getting 20,000 rupees. And if he is doing a regular, friendly with the bank, regular returning the installment, then the 50,000, this is recently few months back, is declared. So these are the important schemes which are important declared during these years. And not only that, during the COVID-19 period, ECLGS scheme, Emergency Credit Line Guarantee Scheme, was declared, where the crores of MSME are protected and crores of jobs are also protected during COVID-19 pandemic. So this is a sort of Jan Andolan raised under the guidance of Prime Minister Narendra Modi.
Right. So you've rightly pointed out all that has been done. And while that is the front end of financial inclusion, at the back end, there is a lot goes into delivering these things. And we have India Stack that has kind of revolutionized digital payments between fintech, startup, banks, digital wallets, and delivering digital IDs through its open access. Now, going forward, how can India Stack and India Stack 2.0 contribute towards promoting the financial inclusion when there is rapid digital transformation? And what is this financial next step towards the financial inclusion that we're talking about?
See, there were different laws earlier and different steps, different stakes working differently. But under the guidance of our Prime Minister, our Finance Minister has made a jam trinity where Jandhan account which was opened is communicated or is linked with the Aadhaar cards. And not only that, this Aadhaar card, Jandhan account are linked with the individual's mobile. So this jam trinity has made a very successful in India, where the direct beneficiaries can be, direct beneficiary amount can be transferred to their accounts. At the same time, one thing important I want to tell you, the eKYC, then UPI and eSign and DigiLock. These are the certain things which are routinely used nowadays in the banking, and that is helping in the digital transactions as well as immediate transfer of the money also.
Right. So I'll just, since you're here, I'll just take opportunity to ask you a bit about the macro situation. We are seeing that, there is challenges that increase across the globe. In India, we are fighting inflation, high commodity prices, then there's a currency volatility, there are fears of global recession. So while the government and RBI have both intervened through various measures, what is your outlook for the Indian economy, and how does India navigate these challenges?
See, this nowadays, this inflation is a global phenomenon. Means inflation increasing everywhere. Even the US inflation is last, you can say 50 years, we can see this is a more in US also. Similar is the case with our country also. But to reduce the economic, this thing, all different steps are taken by the government of India. I can say to control current inflation, the free something, instead of everything giving free, some things are given free, particularly under the guidance of the Honorable PM, different Atmanirbhar Bharat schemes are declared, and around in these schemes, 21 lakh crore rupees are given to the needy patients. And particularly, I will mention here, MSME sector is given 4.5 lakh crore. And recently in this budget, the hospitality section, which was suffering more, the 50,000 crores are announced. So instead of giving free schemes to everybody, where the needy, the help is done. And particularly, I want to tell you, the Garib Kalyan Yojana means in this, but those people who are in need, who are poor, who were unable to work during COVID period, they were given the free food grains, and that is around 80 crore people benefited by these schemes. So these are the different schemes I want to mention here. Today, our inflation rate is 7%. This 7% rate, if you compare with the other country, is very less. Right? Particularly, if we go to the US inflation rate is 9%. So comparatively, no doubt there is a inflation, but comparatively, this inflation is less in India as compared to other countries.
So the US inflation level surged to a 40-year high in June and was up 9% on a year-on basis. Now, experts say that the Fed is likely to raise rates by 100 basis points. What kind of impact do you expect the US inflation numbers and the resulting Fed action to have on the Indian economy, particularly in terms of capital outflows and the impact on the rupee?
To reduce the capital outflows, government has taken a number of steps. No doubt, the federal bank, that is US bank, has raised the rate of interest, and due to increase in the rate of interest, that is a capital outflow is a possibility. So our government, means our RBI, also increase the rates, that is interest rate has increased, and I'm sure that will help this to control the capital outflow. The one that is appropriate, dollars rate is also increased. Dollars rate is increased as compared to rupiah. Rupees are going down. But if you compare our rupee with the other like
Right.
euro, yen, or pound, our rupees is standing well. So
Right.
this is as compared to US dollar, with our rupees value is less, but not as compared to other. That means our economy is sustainable or right, all right.
Right. So, despite all the fears, Indian economy seems to be doing really that. The first quarter was really good, and which is we are supposed to be again fastest growing economy this year with the expected 7.2% growth. So, can you give us a sense of measures taken during COVID-19 and after that has helped the economy bounce back so strongly, even as the pandemic has lingered on?
Even during pandemic and after pandemic, our economy is sustaining very well. I will say it is growing well, and different measures have been taken by Indian government, particularly to help the businessman in our country. And I can give examples. The various moratorium period in the banks, that is increased. That facility is given to the particularly industrialists and businessmen. Similarly, pension funds of increased contribution by the government to the pension fund is also important. Similarly, the Honorable PM has made various direct benefit transfers and to the widow women. To the women we have helped. Similarly, Prime Minister Garib Kalyan Yojana we are using. And not only that, in India during pandemic, it was a serious situation. Number of people were suffering, but as compared to other population of the other country, our seriousness was less, and everybody was helped. All hospitals were helped. Oxygen cylinders, oxygen plants, ventilators, everything was supplied, and more on that, the 200 crore free vaccination was given during the pandemic and post-pandemic area. It is still the booster dose are now continue. So these are the important steps government is undertaking to prevent the pandemic, to control the pandemic situation, and to sustain or to grow the economy.
So just one last question on the economy is that what are the additional measures do you think you are needed to contain inflation and the steps that can be needed to drive economic growth, given the situation that we are in?
One important thing to increase the economy or to reduce the inflation, one important thing which I have told, the petrol and diesel, petrochemical industry. Honorable Prime Minister has reduced the petrol and diesel rates at the time of Diwali. Then last month only, Honorable Finance Minister has also reduced the diesel and petrol rates. And not only that, because of the Ukraine and Russia wars, these prices were increasing, but we are trying to control it, and we have Honorable Prime Minister has suggested to all the states also to reduce the prices. Some states have reduced, some have not reduced. That is different thing. But there is a close observation on this petrol and diesel rates. At the international level, India also leading the global fight against hunger. Under the Honorable Finance Minister, India has called the WTO to allow exporting of public stocks of wheat.
Right.
WTO rules do not allow trading of public stock wheat because it is purchased in cheap rates and can be unfair in the market. However, the India has showed willingness to work with the nation fighting hunger in these thought times. So these are different steps government of India is taking, and I'm sure the way our economy is growing is a very good signal for us. And our economy is the 5th largest economy. I will say America, China, Germany, Japan, and India is the 5th country all over the world having the largest economy and growing very well.
Right. So I'll come back to finance and digital economy. We have a very robust startup system that is also kind of helping deliver financial inclusion through fintech solutions. Now, how do you see the impact of these startups and fintech companies that are offering unique solutions in terms of redefining banking, financial services, insurance, access to these things? And second, what kind of policy balance is needed to allow these startups to continue to innovate at the same time ensuring that the financial system remains secure,
In India, there are thousands of startups, I can say, but there are around 100 unicorns. And these unicorns out of 100, India is the 3rd country in the world having the largest unicorns. And these unicorns in India are because of the different facilities, different suggestions or different reforms given by the government of India. And no doubt, ultimately, the digital transactions and digital facilities which are available are very important. Particularly, I want to mention here, in the budget, Honorable Finance Minister has declared 75 digital banks to be started in different districts on the occasion of the Azadi Ka Amrit Mahotsav. So we are starting with the digital banks in our country. And naturally, this digital banking will be helpful, it will be transparent, and it will be time saving for the people and for the bank, and the better services can be given through the banks.
Right. So you mentioned digital banks. Can you just these 75 digital banks, and the government said that these will be adopting blockchain technologies. And can you just tell us more about these banks? How will they work, and what kind of technology and interface they will have to deliver banking?
See, as you have said, this is a digital banking in the only 75 districts. And this is a blockchain technology. Blockchain technology is important. Honorable Prime Minister always believes the new technology, new reforms, and new solutions. So this digital technology with the blockchain will help everybody, I will say, in the business.
Right. So as far as digital payments goes, India is one of the biggest there. We are doing millions of transactions daily. Now, the other plan in this respect is the launch of digital rupee, or India's very own central currency that the Prime Minister has said, which is kind of, again, the target is again going towards a digital and cashless economy. So what is your view? How can India progress towards becoming a cashless and digital economy, and where will these steps help in terms of a digital currency?
See, in the budget itself, this year budget, the digital rupee and digital banking was announced. And for the digital banking, already we have selected the 75 places in our country. And we are about to start the digital banking. regarding the digital rupee, it is mentioned in this budget, and the central bank, that is RBI, will definitely come out of the digital rupee, and that will be helping. This will be minimum timing, less expenses, transparent currency, and I will say this is to avoid the cryptocurrency, because nowadays the cryptocurrency is not legalized, although the taxation is 30% tax is allocated for the cryptocurrency, but our digital rupee will come, and naturally this will be a controlled currency, Indian digital rupee will definitely help in the business. It will be time saving, it will have good services, it will be no corruption at all, everything will be favorable.
So the government has completed 8 years. Modi government has completed 8 years. What do you see the progress in these 8 years, the challenges? There is a bit of criticism on the economy management. So what would you see is the biggest achievement during these 8 years that the government has completed?
Honorable Prime Minister Modi ji has completed successfully 8 years. And during these 8 years, one thing I want to mention here, our economy is growing fast. Our economy, we are the 5th largest economy growing country in the world. And not only that, during pandemic, during the last 2 years, we have managed the COVID-19 pandemic very well. And though we are the largest, we are having the largest vaccination camp, that's the free vaccination. And not only that, we have also given vaccines and medicines, export of the medicines and vaccines on the humanity ground to other nations also. Even if you see that 1919, there was a swine flu, and there was around the people who died because of the disease. Similar papers were died because of the hunger. But to avoid, everybody was given free food. So these are the different things we have managed during pandemic area. Even not only that, I am a doctor, I want to tell you, any ventilator, we are importing the ventilators. The price of the ventilator is around 10 to 12 lakhs. Honorable Prime Minister has expected from our Indian scientists to start the ventilators, and ventilator manufacture started in our country. And now the price of the ventilator is only 2.260,000. We are having sufficient ventilators, even in the district hospitals also. I am from the rural area. I made to the doctors. So ventilators are plenty available. Not only that, now we are exporting the ventilators. So in medical field, in all status, our export has increased more than what was our target. We have completed our around 400 billion export is also increased. So in all sectors, there is a progress. There is not a single corruption case. Things I can tell, I have mentioned something. These are the achievement of the Honorable Prime Minister Modi ji government.
So just the last question. So we have 2 years left to this tenure of the government. Now, what do you think is your priority? Especially you mentioned that you come from rural areas. So there is a talk that, a bit of there is rural stress at times, So what do we expect from the government over the next 2 years before this term comes to an end?
See, as I'm coming from the rural area, so naturally this government, under the guidance of Prime Minister Modi ji, focusing on the agriculture sector also, because agriculture sector is very important in our country, and particularly farmers who are working day and night in the farm to increase their income. Number of steps have been taken by this government. So to facilitate the income, or to increase the income of the farmers, the agriculture, fertilizer, and different techniques, innovations are also doing in the agriculture sector. So this government is concentrated on the agriculture sector, industrial sector, businessmen, and the poor people who are working on the roads, street vendors, everybody. So this is a government we are taking the precaution of in all sectors.
Right. Thank you very much, sir, for taking out time. Thank you.
Thank you.
Welcome, Mr. Sanjeev Sanyal, to ET Future of Money. Mr. Sanyal is member of the Prime Minister's Economic Advisory Committee, and we are going to be discussing about future of money here. So if I could just begin with, there is a lot of change which is happening in the economy if you look at the digital side. And India, I think, has really taken a leap forward in that area. But is this whole digital, going digital in terms of cash, is this something which is inevitable, and is that the future?
You have to remember that the history of currency is a long one, and currency has evolved in many, many ways, from using cattle and stone and gold for currency, to using metal currency, to using paper currency, to going in some ways we have been digital for quite some time. After all, most of your money in the bank is in the form of a electronic format. So what we are seeing now is that the payments, what should I say, consumer to consumer, is now becoming more and more easy to do. But in many ways we have been used to it already. Credit cards have been around for a long time. So in this sense, this is just a continuation of what has been going on for a very long time. I think people get excessively worked up about the innovations today, but do remember that we have made many major leaps in terms of currencies and money over the last many centuries.
Right. But if you actually look at the composition, the cash to GDP ratio is still very high. So while we are seeing this shift happening, why is this so?
Well, if you mean cash in terms of physical cash, if that's what you mean,
Yes.
there are many shifts that are happening at the same time. Remember, even as we are seeing an expansion in payments being made digitally, there is also a financialization of the economy happening. We are an emerging economy. There are large parts of the economy that are becoming financialized. For example, in rural areas, there is a significant amount that would be based on relationships or even barter of various sorts. Those transactions are getting changed to something that has monetary value. So many of these transitions are also happening simultaneously. Now, it's very difficult to put a exact number on how these transitions happen, and a good subject for research. But let me say that many of these transitions to providing putting a monetary value and monetary transactions is an inevitable part of economic evolution.
In terms of policy, we've seen, particularly the government has been quite a lot of focus. There has been a huge focus on adoption of digital in every area, and cash definitely. So in terms of policy framework, do you see, is there a need for some policy interventions in terms of incentives for, a more faster adoption of digital? Because, if you look at the number of feature phone users, it still continues to be higher. So, how do you actually bring that number within the digital fold?
I think with this, there's already so many things that are happening on the digital platform, and more things are getting transitioned onto it. Much of this content is now becoming more and more available in Indian languages. So I think this is a transition that is happening. And of course, the government is helping it along by putting more and more services on these platforms. So clearly, we are putting in a big push for this. But this is something that's happening worldwide, that people are moving into working, providing services, getting payments, doing transactions online, whether it's e-commerce or applying for various government services. All of these are now becoming online, and consequently, so is this for payments. But I do want to point out that this is not, as I said, this is not something that has suddenly begun happening. It has been happening for some years now. It is just happens that we are gathering pace. And when you're saying feature phones, let me also point out that there is also a transition to using various kinds of cheaper versions of digital phones, smartphones, and these are ubiquitous now, and so they over time become standard.
So if you look at the projections about growth for the digital payments market, it is expected to really grow very fast. There's a lot of scope for growth there. And we've actually seen a number of fintech startups sort of, trying to sort of cash in on this opportunity. So do you see it becoming a commoditized game, or is there a scope for innovation?
So I don't know why there should be any what should I say, trade-off between commoditization and innovation. If anything, commoditization is the end result of successful innovation, in the sense that as over time, innovation smoothen out all the kinks in the digital universe, it becomes commoditized. Almost every single industry that we today think of as commoditized started out as an innovative area where innovations over time were opened up and used up all these spaces, and then it inevitably becomes commoditized over time. So this will also happen to the digital space as it becomes commoditized. There are already large parts of the digital space that are reasonably commoditized already. So I would argue that innovation will continue to happen, and at the margin, it will ultimately become commoditized as an inevitable result of innovation.
So in terms of the digital payments, there has been a lot of progress. There have been a lot of innovations. But if you look at credit side, it's not that much. So do you see scope for a faster adoption on the credit side as well?
Again, you have to remember that this is you've got to take it in the longer history. People tend to get all worked up about this specific phase of innovation. Credit has been happening for a long time. There's been lots of innovation in this field for a long time, over centuries. This is an incremental shift. It is not a radical shift in that sense, because in the end, giving out of credit is an act of risk-taking. And while you can use AI and you can use various tools in order to smoothen down the process, sharing of information. As I said, you can run all kinds of algorithms to do better risk-taking, presumably. But all of this does mean that ultimately you're taking risk and managing of that risk. That is ultimately not a digital activity. It is a activity that ultimately a human being is taking a decision. And there are many shades of gray in all of this. Secondly, you have to understand that there are, in order to do banking, which is the main activity of a credit system, you have all kinds of restrictions on banks, and they are there for a good reason. Whether it's liquidity requirements or restrictions on predatory behavior and so on. All of those exist for a reason, and those reasons have not gone away. So therefore, if digital platforms want to become more like banks, then it is fair that you apply banking regulations on them. A bank or any facility that wants to become a quasi-bank of any kind, and we saw that even with NBFCs, it's not the case that the rules and logic of banking and the regulations we have on it have disappeared just because you have now created some tools. So all these digital tools are exactly that. They're tools for hopefully making these systems more smooth, more efficient, but they did not mean that the logic of the economics of the financial system has been radically changed by this.
I was actually coming to that. Governments sort of really been pushing digital finance. But in terms of regulations, there have been, certain concerns about the risks coming from emanating from some of these fintech companies, the way they conduct businesses. Now, we've seen RBI has taken some measures recently. So in terms of regulation, I mean, what is there a middle ground possible so that, the regulation doesn't stifle innovation? I mean, how do you really strike that balance, that you allow innovation as it is, you continue with your regulatory?
No, obviously, this is something that has to be done, not just in finance field. There are many, many fields in which this happens. For example, we used to have these extremely draconian rules on cartography and geospatial data. It was effectively used to be a monopoly of the Survey of India. Over time, now everybody's phone has a Google Maps on it. So, innovations happen. They are very common, and ultimately, the regulator changes them in a way that is meaningful to the time. So this will even happen in banking. But do be aware that the field of finance has developed certain architecture because there are certain issues that are still around. Now, it may mean that for whatever reason, innovations make those concerns irrelevant over time. But for the most part, the technological changes that are happening right now have not gotten around many of the risk-taking related or uncertainty related problems that are there which are inherent to the financial system. So as long as the world remains uncertain, and it will always remain uncertain in some way, you will require to have various kinds of norms, Basel norms for banking, keeping liquidity restrictions, restricting certain kinds of predatory financing, and so on. All those restrictions continue to be relevant, and they need to be applied where is inevitable. What we do not want is fintech developing at the cost of traditional finance, because they are exempt from certain kinds of norms that are being placed on the traditional systems. That would be unfair. All that is just that is not innovation at all. That is simply a form of sort of bypassing the system.
So there is no case for a light touch regulation as the fintech sector has been sort of clamoring for, and they've batted for always.
No, there is a case. There is a case that as innovations allow us to sort of do things better, presumably because of better better ability to share information or whatever may otherwise be the case, then in which case those restrictions can be removed. But then when it is judged that it is a good thing to remove it, it should be removed from everybody. Why just fintech? What we cannot do is regulatory shopping by one segment when you are allowing when you are forcing other segments to comply. Fintech must be, any kind of fintech should be able to stand on its own right, not because it is somehow exempt from something.
Right. So another issue which sort of has, has drawn attention from regulators is of cryptocurrencies. And there's been a lot of discussions, not just in the country, but also overseas. There are regulators who've taken action on cryptocurrencies. So in terms of a policy framework, what is your view on how cryptocurrencies should be dealt with? in terms of policies, is there a need to have an open mind about these form of whatever these form of digital tokens or digital money?
So first of all, let's be clear what these tokens are. So if they are currency or are they assets? Because then you deal with them completely differently. Now, there is no evidence that they actually function as money. So when you use money, what are the characteristics of money? First of all, that they have a stable pricing related to a commonly used basket of currencies. There is no evidence that that is the case. Secondly, is it the case that they are backed by a state, in which case, there are some known uses that can be mandated uses, such as, for example, paying taxes. That is also not the case. Then is it the case that they are necessarily always easy to use? That is also not the case, because their ease of use is in many ways restricted, partly by regulation, but also there are other issues with them. And then there is the issue of issuance. Who issues these currencies? There is no control on who issues them, why they issue them. To say that they are issued by an algorithm doesn't mean anything. Algorithm is just a set of rules, and those who set those rules or control those rules are not in any way, regulated in any way. So my own view is that what are called cryptocurrencies are not currencies at all. At best, you can call them crypto assets. Now, if they are crypto assets, then fair enough, then they should be treated like any other asset, and you need to impose on them capital gains tax and other such taxation and other things, which is what we have done in this country as well. We are open to allowing innovation, but as I said, innovation can be allowed as long as all the players in the system are given the same set of rules. And this also applies to crypto assets. After all, you and I are not allowed to issue a currency tomorrow morning, are we? So can I simply begin printing notes and say, okay, now I'm going to use the Sanjeev Sanyal note? So if that is not allowed generally, why should an algorithm set up by a private company be allowed to do it? So these cannot be considered as currencies at all.
Right. But if we are talking about assets, and India has gone ahead and imposed a tax on crypto assets, but we don't have a larger framework. So
no, if we have a framework for assets, if you buy and sell assets, you buy homes, you buy equities, you pay capital gains tax. So as with any other capital gains tax, here also you do the same thing.
So, but is there a need for a specific sort of a framework for these crypto assets? Because, there is a lot of innovation that is coming about there. And
yes,
is there a need for regulation? Is there a need for regulating these assets?
No. So the point is a very simple one. No, the innovation is in a form of distributed ledger, which blockchain technology is basically a form of ledgering. There is no restriction on using this technology for ledgering anywhere you wish. It's only when you claim that you have an asset which is ledgered and you're issuing these assets, then they will be treated like any other asset, and you will have to tax it in certain fashion. So the point I'm making to you is there's no restriction on the innovation. After all, blockchain technology has a million different uses. It's with the issuance of the asset that is the concern. After all, you can create a rupee which is compatible with blockchain technology. We can call it the central bank digital currency or whatever you want to call it. And if it is maintained on the basis of a digital or a blockchain format, but it's still a rupee. It's therefore consequently a currency. It is backed by a central bank of a recognized country, and it has a stable value because it has a stable value against a basket of currency, a basket of goods and services, and so on and so forth. It therefore has the characteristics of a currency.
Right. I was coming to, there is talk about CBDC. Finance Minister made an announcement to this effect in the budget. So in terms of CBDC, we've seen statements like, if we have a CBDC, it'll sort of kill, private digital currencies. So in terms of how do you see CBDC really taking this whole digital finance forward? And do you see private digital currencies coexisting with, the ones issued by the regulator themselves, or there is no space there?
So let me be again clear. A CBDC is essentially a new format for an existing currency in some ways. So, for example, the rupee exists as a coin, it exists as a note, it exists as, in fact, already in a digital form. In most of your bank account money is in digital form anyway. So that already exists in digital form. All that happens here is that you now have a blockchain compatible rupee. But the rupee is the same. Into the future, there will be other formats as well of the rupee. So in that sense, the CBDC is just making it compatible to a new technology. Just like in the past, we made rupee compatible to a new technology of making paper. Or when we went into computers, we made it, compatible to maintaining the ledgers on in an electronic format. So that is all there is to it. So a CBDC is just a new format for a currency that can exist in other formats as well. Now, as far as the private cryptocurrencies is concerned, the point I was making earlier, they are not currencies at all. They are assets. And in that sense, they are not even they are not competing in the same space. What is happening is that in the absence of a central bank issued blockchain compatible currency, some of these private currencies are perhaps becoming have a market because blockchain technologies are getting innovated, and there is no central bank issued blockchain rupee, so to speak, in which these transactions can be made. But as and when that can be made available, they can use it. But the issue has always been whether or not you can use it, you can issue this private currency. My point is that it's not a private currency at all. It's a private asset. But that is true for anything. I can also breed cattle and say that, I've instead of mining for a digital asset, I can also breed cattle, or I can grow wheat, and then I can also barter it. But that does not make it a currency.
So there is one aspect on which there are some concerns on CBDC. If you look at the current currency, there is anonymity associated with paper currency. So the CBDC which is being proposed, do you think it can sort of assure that anonymity?
So the question is, the whole point about digital currencies is that it's traceability. Otherwise, why have this distributed ledger anyway? So since the case that is made is that digital currency is entirely traceable because of distributed ledger, then why would people be wanting this anonymity in the first place?
So you don't see a need for, sort of providing in terms of policy or some kind of a regulatory assurance that, the anonymity to a certain
No, the question is, why do you want anonymity? For what purpose do you want this anonymity?
No, because if the currency has to be treated like a currency, and
why you are
almost same as a paper currency, then
why is the paper currency? Most of the transactions you make today are from your bank account. You're paying with your credit card or from your UPI or whatever else format that you are using. You're paying using checks. Is that anonymous? No, we have it's all digitalized, and you can keep track of it. All that this blockchain does is changes the format in which this digital data is stored and is retrievable. It is, in that sense, it is an innovation, but not a radical innovation as people are making out to be. That's the point I'm making to you. It is an innovation and a useful one at that, but why do you need this anonymity of paper currency? First of all, the whole point about it is a ledgering system. Since it is a ledgering system, consequently, the whole point is that you can trace it. Now, the only reason you would want not to trace it, after all, what transactions are being committed that they cannot be kept track of? What is the privacy angle to making these transactions? I am unable to understand.
Right. Because there has been a lot of commentary, a lot of discussion around, because if we want CBDC to be as same as a paper currency, then it should.
It's not a paper currency. We're telling you the whole point is it's not a paper currency. The whole argument for it is that it's traceable and can be ledgered, and therefore you can exactly tell how that particular the history of that particular coin. So if that is the case being made, then the case is entirely being made that it is based on traceability, that it has value. Otherwise, I can, out of thin air, say that I own a Bitcoin and give you that, right? But I can't, because it has a number that is unique and it can be traced. So that is the whole argument for Bitcoin, for a distributed ledger, that you can't fake it. Since you can't fake it, therefore it's traceable.
So if going back to the digital finance, if you look at the way our banking system has been, do you think the traditional banks are prepared to sort of move forward with this entire movement which is happening towards digital finance?
Well, some banks will innovate faster than others. Let there be an open field for innovation. Let new players come in, let traditional banks also innovate, but it has to be done with a situation where there is an even playing field. You cannot expect traditional banks to have all kinds of regulations placed on them, for many of them, most of them for good reason, and then allow a new player which doesn't have those rules applied to them. If it is found that those rules are not needed, then let it be removed from everybody.
Before I just close, one issue which sort of tops everyone's mind when you're dealing with anything digital is the data security risk which is associated with this. So for policy makers, is that a huge concern? And in terms of the responses, is there some kind of work that's going around for a policy intervention in this area?
Of course, it's an evolving situation. Data security is an extremely important issue. And naturally, because we are doing such a lot of transactions which are all on some sort of a digital platform, consequently, data security becomes important not merely from a privacy perspective, but also from the perspective that you can attack and corrupt this. There are issues relating to security, cybersecurity. There are issues relating to simply whether or not these things can be, for example, attacked and corrupted in some fashion. So there are many issues beyond just the narrow issue of privacy. At the same time, we need to take into account the fact that this data can be mined in many useful ways. So how do we anonymize this data and therefore find ways of using it for training, for example, artificial intelligence or other forms of new digital technologies. So I think there is a fine balance here, and obviously it is a situation where we will keep evolving our policies. There's no hard and fast rule, but yes, maintaining the sanctity and security of the data is absolutely critical.
It's almost akin to 2013 situation. So in terms of the macro challenges that India is facing, so how do you sort of view the situation right now?
So clearly, almost every challenge we face right now is closely related to high energy prices, global energy prices. And it obviously the direct impact comes on two places, but they are our external accounts and most importantly in inflation. With this one exception, the rest of the economy is actually in fine shape. Our tax system is generating a lot of revenues. Generally speaking, our economy is recovering and has a fair amount of strength. Our financial system is in good shape. And in fact, compared to virtually every other country, even the inflation problem is reasonably being controlled. Although it would be, it would be nice if it was lower. So I would argue that the Indian economy is in very good shape, but for this one very critical problem of high international oil prices. Now, there's very little we can do about this in the medium term. I mean, on the margin, we can maybe buy some Russian oil, but other than that, we can not do very much about it because we import about 85% of this oil. And so of our requirements are, if you are importing that much of our requirements, then clearly we have a issue with imported inflation.
Yeah, so, we saw RBI, undertake some measures yesterday to boost capital flows. So, is there like really a need for, encouraging capital flows in the country? And is there a need for some more measures like we saw some measures in 2013 to contain CAD as also to boost inflows?
So I mean,
have we like really reached that 2013 situation that we need to?
No, I think there are many differences. First of all, what the Reserve Bank did is only at the margin. I mean, there's some marginal use for it. It is not the case that we are in the 2013 situation at all. First of all, as I said, our financial system is in good shape. The supply side of the economy, thanks to the construction of new infrastructure, whether the many reforms done over the last few years, and so on, the supply side of the economy is actually in good shape. There is no excesses in the system as such, but for one thing, which is high international oil prices. If high international oil prices can be brought down, the economy would quite easily accelerate out of any of these problems. So in some ways, the high international oil prices is the key problem that we have. Most of the other problems are actually not major problems, or they emanate from this one problem.
Right. So, do you see a case for fiscal tightening from the government side to support monetary measures taken by the RBI?
It's obviously something we have to do on the basis of how things evolve. The Reserve Bank has obviously tightened recently, and I'm sure on the fiscal side measures will be taken. But let me be clear that longer term infrastructure build out will be, that will be continued.
So, around the time when the budget was presented, it was almost that, the private capex revival was like almost there. We were it was going to happen. Do you now see that like really getting delayed because of this macro issues which have cropped up after Ukraine?
Well, clearly, the global environment has become cloudy, and global liquidity is getting tightened, and that has a knock-on effect on availability of global capital. However, I would argue that our own supply side remains very robust, and you have seen FDI and other flows continue to be quite strong. Even corporate balance sheets in India continue to be reasonably good. And wherever there are opportunities, you are seeing credit growth and other indicators of private sector investment and spending remaining reasonably strong. So there is no particular reason to believe that this has got derailed in any way. Of course, as I said, the international situation remains a matter of concern, and even in the international arena, energy prices are a major issue. Even in other countries, this is feeding through to other forms of inflation, and consequently, the tightening of monetary policy and so on that you're seeing in other countries, such as the US and so on, is emanating out of this inflation problem, and then the knock-on effects of that.
In terms of growth, do you think we're still on the 7% track? What's your assessment?
Yes, I think we will exceed 7% in this financial year comfortably. As far as the next year, obviously it depends on the global situation. But as I said, if there is one economy in the world that is in relatively good position to take advantage of opportunities that emerge, that would be India. Because as I said, our supply side is actually uniquely well positioned.
Thank you so much, Mr. Sanyal, for joining ET Future of Money here.
Pleasure. Pleased to be here.
Hi, I'm Aloni Bhatt, and welcome to ET Future of Money Summit. It's our attempt to explore and educate ourselves on how money is changing and how it will change us and the ways in which it will impact us. Fintech, for some of us, has changed the way we transact with money, we access services. But can Fintech be the catalyst for good? Not just enriching and empowering a few, but many. And to talk about this, I have with me a Fintech founder and CEO who has rock star status among his followers. Nitin Kamath of Zerodha, welcome to ET Future of Money Summit.
Thanks, Meloni, for having me on this.
So, we're talking of a fintech for good, taking off from a recent tweet of yours, where you say volatility-wise, we are better off than the US. And that's been possible because of SEBI putting down stricter rules over time. And the rules may have hurt brokers in the short term, but people have benefited in the long term. Now, in the same vein, when you take this long-term view, what are the 2 or 3 things that you feel we need to put in place right now in the short term so that innovations in finance benefit not just a few, but many?
Right.
Could be stricter regulations, stricter norms for businesses.
Yeah. No, I see. The thing is, one of the problems with the startup ecosystem is there are so many unsustainable businesses, right? And I had reasoned for this being almost like a tax arbitrage. If I as a founder want to take money by selling my stock versus taking dividends through profits, there is almost like a 30-40% tax arbitrage. So maybe that I sometimes even believe that like this whole tax incentive gets people to focus more on valuation versus profitability. So maybe something around that, because if the world goes into like a 2-3 years of headwinds, like where we are right now, a lot of these businesses which need to survive won't survive, which is not good for the country in the long run. Also around regulations, the problem in finance is regulations are really made for the rotten apples, but it can sometimes stifle innovation as such, right? As in it's impossible. So maybe kind of bucket businesses into different categories and have different regulations, because today it's one regulation for all kind of businesses, right? If I'm a broker, SEBI's regulation is exactly the same for all the brokers, and it's the same thing for NBFCs, etc. So maybe kind of recognize businesses differently based on what they're doing, because there are different types of brokers. Not all brokers are the same. Different types of lenders. So that way we don't end up stifling innovation of sorts anywhere. So because for the country to do well, financial inclusion, financialization of the country, all of this is very important, and that can really happen, I think, if businesses kept innovating. I don't think what the financial products of the yesteryear can really help in financialization of this country. So these 2 things maybe.
But first of all, we have bringing in regulations, especially for new businesses, is tough. Now, on top of that, you're saying that bucket the regulations depending upon how people or how businesses perform.
Right.
That is going to make it extremely chaotic in terms of the regulator.
Not really. I mean, they're not like 20 buckets. There are probably 2 or 3 buckets, right? As in,
Okay.
right. So for example, let's there's whole talk about neobank, etc. Right? Maybe neobank requires a regulation which is different from the bank's regulation, the underlying bank's regulation. Because if you're going to categorize neobank as a bank and kind of put the same regulation, what is required to be a bank to a neobank, it can never fly, as in it's just gonna die on day one, right? So it's the same thing in the broking, in the savings, investing experience. I mean, I think SEBI has done an amazing job, but the challenge SEBI has had is, we've historically in India, brokers have done frauds, right? I mean, now if the regulations are going to be put out there, it's going to be considering that rotten apple, right? As in, how can this, guy not misuse this? But the way some of us operate, like, some of the newer online brokers operate is very different from how the older generation brokers used to operate. Because most of these frauds really, the genesis was portfolio management. A lot of people took broking licenses to advise customers, trade on their behalf, etc. It was like a way out around portfolio management. All the online brokers today that I know of, no one really interferes in customers' trading decision, right? I mean, we have never once asked a customer to buy or sell a stock. So when this is a scene, like I think we do like almost like between 7 to 10 million orders a day. The number of orders placed by our dealers is not more than 100. Right. So, whereas if you look at a traditional broker, the orders placed by dealers would be at least 20-30%, versus with us, which is 0.0001% or whatever. Right. So the regulation required for these two kind of businesses is different, So I mean, it's a big challenge. I'm not saying it's like an easy problem to face, but I think maybe regulations should be, because there are different types of businesses coming out today, and maybe regulations should not be uniform across everyone.
They need to keep pace, with business. You've made several investments in fintech startups. You continue to do so, and you often called it Neki or Pooch Pooch moment.
Right.
It's a business, so of course you want it to be profitable for both sides. But beyond, the business consideration and keeping the lens on fintech for good, what then drives your investment logic, and what would shift it or change it over time?
See, the thing is, we have a large public market portfolio, as in my younger brother manages it. So, what we are doing through Rainmatter, which is, through the fund through which we are investing in a startup, is only for impact. Back in 2016, when we started this, that was a time we realized that we are becoming like a big fish in a small pond. And we said the real problem to solve in this country is to grow the capital markets and not really, like just keep becoming a bigger fish in this pond types. And then we realized that the right way to grow the capital markets is by offering niche platforms. And we said we will only build what is core to us, and all the adjacencies and moonshots we will do by collaborating versus trying to do it ourselves. It's a very efficient way of doing it. One of the reasons why we didn't have to go raise a lot of capital, like venture capital, etc., is because we didn't try to attempt 20 different things at the same time. We collaborated wherever possible. So the thesis is the same, even today. So if someone has got an idea which can potentially expand the capital market ecosystem in this country, we've been saying more than the funding, I think what we've been able to help with is an audience, right? Because in finance, credibility takes a long time to come. You wouldn't trust with your platform with your money, etc., securities on day one. It takes, like for us, it took us 4 years before, 3 years when you got our first 10,000 customers, because people weren't trusting on day one, who is this brand, right? As in, this isn't a transactional platform. A broking platform is an investing platform where you save, invest for life. It's almost like a bank, right? So we showcase some of these startups to our customers. If the startups kind of build a product that's worth showcasing. We've helped with a lot of regulations. People are usually very, have a lot of questions around compliance and regulation. So this is essentially what we've done I've personally done for 25 years. So getting the answers out there, etc. So I think the value we bring on the table is not just the money, because today there are enough and more people cutting, like seed and Series A round checks, so I think the value we bring in is in all of this, and we continue to do that, as in we are continuing to chase impact. Like right now, yesterday we spoke to a startup who's building finance for Gen Z, like in a different language, like in a language that the current 20 to 25-year-olds can understand. And there was like he gave a very interesting example. He spoke about emergency money, and he said, think of the example they have on the platform is you're living in with your girlfriend, and the girlfriend says move out, so do you have money to move out? I said, I mean we've at Zerodha we have a lot of examples of why emergency fund is required, but not this. So we're constantly looking for that opportunity. I mean, we've extended that thesis outside. I'm personally very passionate about like health, fitness, etc. I think more people should be conscious, and so we've extended Rainmatter into now saying we will also help businesses that are making easier, making healthier choices easier for people in India, be it around food or being around staying healthy, mentally, physically, whatever. So it's kind of extended from fintech to this as well.
Right. Good luck. But Rainmatter has invested in a lot of platforms, like for instance Stoa, which is an online publishing platform. Then Learn App, which is a digital learning platform, and others. Finception, which is again a content platform. So why this focus on learning, especially on providing financial literacy?
Yeah, I mean, I think that really is the biggest problem for this country. So I think even at Zerodha, right, when most customers come to us, they don't really understand finance, right? As in, they're really essentially enabled. This whole idea of saving, investing is enabled by peers, right? As in friends, family, whatever. And people typically end up picking habits from those people who enabled them to think about money and investing, right? As in, if your friend was doing investing in gold, you're most likely, also going to start investing in gold, right? It's like that. And I think, see, the thing is, for India, in the long run to become the economic power that it potentially can become, you need Indians to be backing Indian entrepreneurs, and the wealth creation to be happening within the country, right? For me personally, one of those points which has stuck out in this whole last 10 years of wealth creation is majority of it has really happened outside India, right? As in, you pick up, all the valuable startup in this country, maybe 10 to 20% of the holding is within India, right? As in, that is, at extreme levels, right? As in, otherwise, most of the wealth creation is really happening outside. And that's, how can a country become wealthy if, most of the wealth creation happens outside, right? And the reason that's been happening is because, entrepreneurs haven't had access to capital within India, right? So that's how you went chasing wherever the capital was available. So I think as a country, we need to start taking more risks. Wherever whoever can take risk. I don't think outside the top 3-4% of India can really afford to take risk, but the 3-4% of this country should be able to kind of take risk, and they will be able to take risk, appreciate all of this if they understand finance well. And so this whole educating people on money, finance, risk is really a very core part of whatever we think, the reason we exist in this country, So even within Zerodha, Varsity is our education initiative, and we've been spending a lot of time and effort on this for the last 10 years. And it's probably in the top 3-4, kind of MOOC education initiatives around the world on capital markets. I think financial education is really the key for the country to do well in the long run. We now are working at, partnering with schools and colleges, because we believe that maybe the right way to solve for this problem is to teach people finance before your biases kick in. Because, once you have money in your, account and you're putting that money at play, right, you get influenced by fear, greed, and your learning doesn't, may get overridden. So if there was some learning before you actually had access to money, you probably, will do much better in terms of, managing that money is what we're thinking. And so we're trying to now see if we can find ways to nudge colleges and universities and even high schools to think of introducing not finance as a subject. That's too much, but maybe at least like five to 10
Money.
hours. Yeah, like
Understanding money, the value.
understanding money, right?
Yeah. Okay. And what's been the response like? I'd be especially interested in the high school response.
Yeah, I mean, it's tough, so I think high school's tough, but colleges are more reciprocative of sorts, right? Especially the management, like the MBA colleges, etc. So what we're doing right now is that we've created a varsity certification program. It's like a proctored exam that you can take. We've taken like 5 modules from within varsity, which we think is a bare minimum that every Indian should know. And we've packaged it as a module with a proctored certification at the end of it. Now, this module is available, as on a mobile app, in terms of video, all of this. We're charging 250 rupees, which is the proctoring cost to take the certification. And also because, you then know people who are serious only apply to take the certification. And we are trying to collaborate with the college saying, would you be okay to open up this certification program within your college? And we will answer your students' queries. If anyone have queries on any of this, because it's all self-explanatory, the videos are very well made, etc. But we are also saying we'll do the solving for the query bit. So we are planning to take this live next month. So a lot of colleges have come forward and said, we will do this. So we need to see how many people actually sit through the content and and end up clearing the certification. But the certification, because like in today's world, especially among kids in the Gen Z, right, you need a reward, you need something at the end of it, otherwise no one's going to do anything. So we're seeing if certification can be the enabler of sorts.
All right, it'll be interesting to see how this goes. I want to move to markets. In 2021 we saw lots of Indians flocking to the markets, among them lots of young people coming into markets, and the reasons for them coming into the markets for many, and I think among them were lower interest rate environment combined with frictionless access to financial markets, due to fintech services and online brokers such as your company. But investors right now are not that excited. So RBI in its 2022 financial stability report said that the monthly active users in Indian capital markets are now less than 1 crore. In the short term, things don't look so great. But what's your outlook for the medium to the long term?
Yeah, so I think one of the sore points in the last 1-2 years of growth has been, people have come to the markets with the wrong expectations, right? Because, a lot of this was enabled from social media, right? As in a lot of influencers on social media, and, all of them making it seem like, making money in the market is somehow very easy, right? As in, that was really the vibe, as in, like everyone came in thinking, they can quickly somehow make money in the markets, which is impossible, right? As in, and so it's good that the reality is sunk in fast, because this could have gotten, like
out of hand
of sorts. So in a way, it's not bad that we're seeing a drawdown, because otherwise I think, you could have gotten to a point where there was froth built up. The good thing for India has been that, if you relative to other markets, we've actually outperformed. Like, while we are also still down, I think there's a lot of interest in India, right? As in not just in foreigners, even within India, etc. So that kind of holds good. So, but my view on the business is, we will do whatever the markets will do. We are essentially a mirror image. If you look at the number of new investors opening accounts every month, and you were to map the mid-cap index of the Nifty, it'll almost be a mirror image. So we will do as good as the market does. Now, how well will the market do? I have no idea about it. So, I mean, I am, but I'm more pessimistic than optimistic in the short run, because it somehow seems like, this the mess that we've gotten into, maybe because of what US has done over the last many years, is not going to get through so fast. Right? That's my feeling, but it's very tough to say. But in terms of new user growth, I think we are also, see, the problem in India is, like, you referred to in that original tweet also I was saying, which is we don't really have too many people with money to be able to save, invest, right? As in, not more than 10 crore Indians can potentially save, invest in the market. So the upside growth for this country in terms of new user participation in
It's
the
still
short run, yeah, it's a subset of that. It's not,
Yeah.
unless of course, India as a country does very well, and we go from this $2,000 per capita to 4,000, and then there is more money in the hands of people. That means now there is more money to save, spend, invest. So I mean, in both ways, I think, internally within Zerodha as well, I think we have the best case outcome for the industries. I think 15-20% growth year on year from here, right? I think what happened the last 2 years, this whole 100% is just a aberration. It's impossible for that to sustain.
Keeping the focus on markets, I want to talk about SIPs. Now, despite the flattening, SIP account openings, the average portfolio value also being down, the inflows via SIPs have continued to remain, steady. For instance, it's about 12,300 crores nearly in June and in May. From September 2021 to now. So that's 10 months. SIP inflows have been at about 10,000 crore a month. What does this tell you about the Indian investor?
Yeah. No, I mean, see, the thing is, India, hasn't seen as much volatility yet. I mean, yes, we are still down, right? But then, if you look at the index, we're down 10-12%. I think when the SIP flows will get affected is 20% and lower. So we need to see the behavior when you get to that point, right? Where, where suddenly you're down 20-25% on the index. If hopefully we don't get there, but that's when I think the behavior changes. Even in the US, it all changed after a 20% drawdown in the index. Right? Suddenly everyone became passive. No one was doing anything. But until now, the behavior is beautiful, because this is what you would expect. People who do SIPs to do, which is stick and invest and kind of benefit from dollar cost averaging. But will people stick and continue their SIPs if markets were to be down for a prolonged period of time? I'm not sure. We need to see. What has happened is, like, there's a question that we ask internally as well, right? Today, because of a lot of platforms like us, which are very direct, and the customer is really doing whatever he wants to do, as in we are not influencing any decisions as such. Potentially, like, people could stop their SIPs without the platform, nudging them to say, what, don't stop it. Traditionally what used to happen is distributors had that swaying powers on the customers, right? As in, if you were wanting to stop a SIP, you would call the distributor, and distributor, had an incentive to say, please don't stop, and today there will be no one who will say, please don't stop, so it'll be interesting. I think we will get to see what people do if we are in a prolonged kind of a bear phase, or if, the fall currently that we are in suddenly, becomes like a 20% fall of sorts. So behavior potentially will change at that point of time.
Do you have a time horizon in mind?
No, I hope it doesn't fall. So, but even this whole bearish phase where the market is not going up, it's kind of plateaued of sorts. I think 3 to 6 months is where people start questioning why do this. Because your interest rates are going up in your bank account. Your GSEC rates are up. So people see, eventually what happens is money really moves to asset class that is outperforming. So the reason all of this money came to the equity markets was because equity market was the more outperforming asset class in this country. As in, if tomorrow it's fixed deposit, money will start moving towards it. Yeah, so it's just that.
Okay, moving to central bank-backed digital currency. India is to get them really soon. And I was speaking to Professor Ishwar Prasad of Cornell University, and he's written a book, The Future of Money, How the Digital Revolution is Transforming Currency and Finance. Now, he says that digital transactions have taken off in India. And while CBDCs are welcome, the change has actually come about. Right. So how do you see CBDCs impacting the way we transact and the impact on the banking and the financial sector?
Yeah, I think he's right in that way that, I don't think it's going to make digital transactions more seamless. I think CBDC in countries where, there is no like a digital payments infra like what we have in India. I think it's more valuable than in India. I still don't have a view on it because we need to see what is CBDC going to be like, right? And if it's going to have too much control from the government, the adoption may be lesser, right? But for sure, for things like subsidies, fertilizer subsidy, etc., it's a no-brainer, So, but I think I'll have a more, like a better view on all of this once, we at least figure
once it actually rolls.
Yeah, so.
Okay. So I want to talk about this account aggregator framework, and you've spoken about the need for banks, depositors, insurance companies, to go live on the account aggregator framework, Sehmati. Why do you see this as being critical?
So there are multiple use cases. I mean, I think the biggest use case today is for lenders, because they can lend better if they get more data, customer data. But the use case that I'm thinking of really is more around advisory. See, today, the problem in India is that, we've had millions of new investors come to the markets and millions of investors who don't know what they're doing really, and you need an ecosystem that will help them to do the right thing. Today, the big challenge we have, in the capital markets, building an advisory product is that if you were to ask a customer, can you tell me your bank balance? Can you give me a bank statement? Give me your insurance statement. He's going to drop off by the third question. Right, as in, the best, to be able to advise, if you were to ask me some question around finance and money, I would need your information. Without that, I can't really give a generic advice to you, right? So I think what account aggregator can do now is make that whole sharing of data very seamless, right? So for example, if you were to come to our platform and we had this, I consent for Zerodha to get, my financial info. And we can then give you the right advice, because the advice is very contextual today, right? As in, what works for me may not work for you, right? As in, and figuring out what works for you requires advisors today to get the customer data, which is impossible. People don't give it because people have multiple bank accounts, multiple mutual fund folios, multiple insurance policies. Most people themselves don't know what all they hold where, right? Which is other use case that can be built on account aggregator, which is, can you give a consolidated kind of a portfolio view for a customer? Like my dad, he's just got so many things all over the place. He has no clue where he's bought what. And this is just not my dad. It's just a lot of people, even young folks, right? As in, so I think I'm excited because of these, that we can potentially solve for these two problems. One is advisory, and the second one is just, give a consolidated kind of a portfolio view, which also makes, some of the other things which is easier, because, today what happens if, at death, a lot of family members never get to know what were the financial holdings of this person, right? So you can kind of solve for many of these problems, with the account aggregator framework.
And do you see everyone actually coming on board to, help it happen?
Yeah, that's the only way it'll happen, right? As in, because it can't be like a half-hearted attempt. You can't have 5 banks. You can't have one depository. You need everyone to be on it, and sharing the data. That's really when it'll work. The good thing is the SEBI chairperson, early this year said that SEBI's on board. So which means, SEBI, all the SEBI intermediaries will be on it soon. The IRDA said they will be on it. I think banks, there have been resistance, but recently read some of the government officials saying that they're gonna almost enforce banks to start sharing on the platform. So yeah, very exciting times. I think it'll end up opening up newer opportunities for newer types of businesses in this country.
Okay. This is my final question to you. As a founder of a fintech company, as a funder to other fintech companies, and as this world enters what is being called a funding winter, as valuations drop, companies let go of people. How do you see the opportunity for fintechs in India, who raised nearly $8 billion in 2021?
Right.
And within that fintech, the bulk of the money went to lending and payments data.
Correct.
How are you seeing this environment shape up, and where will we see this growth?
Yeah, and I think one of the problems for the fintech industry in India has been high CAC, right? Because people have been spending too much money acquiring users. Now the problem with acquiring users paying too much money is then you have to think about how do you monetize that, right? As in at some point of time, as in like last 2 years, maybe a lot of businesses didn't think about monetization, but eventually all business has to generate revenue, and you have to make more money than what you spend acquiring a user. So that's a challenge. I think in India, monetization is a big problem. It's very tough to generate revenue from the top, outside of the top 1 or 2 crore Indians. And I think that's where all the challenge will lie in the next 1-2 years for the fintech platforms to figure ways to monetize. Of course, in lending, monetization is kind of baked in, but the problem with lending is you're kind of lending to people who can't otherwise get loans, so you're kind of taking higher risk. So if the world gets into a spot of bother, what happens to these loans that you've lent out? So I think it's going to be tough times in the next 1, 2, 3 years. And if you kind of speak to a lot of fintech founders, they're all thinking very similar as well. They're saying we need to get more efficient, we need to become profitable, we need to become sustainable, etc. And hopefully that also means that people start questioning how much money they spend on acquiring user, because really the genesis is that, as in if you spend like say 10,000 rupees acquiring a user, you have to find ways to generate 10,000 rupees from this folk, right? As in it's very tough, so if you were to kind of benchmark what is happening in the US right now in the startup ecosystem, especially around fintech, and the kind of haircuts they have taken in stock price, it's kind of quite ridiculous. Because I think the last 2 years, a lot of fintech companies could raise money saying, this company is at $100 billion. What, I deserve at least $10 billion. So the problem is that company is it's come down from 100 to $10 billion. So you can't even make that argument anymore, saying, like I'm relative valuation, I need to get at least this much. So, but like I said earlier, I think it's good that this happened earlier than later, because this then makes the entire ecosystem a lot more efficient and sustainable and all of that. Otherwise, the bubble would have just gotten bigger and eventually exploded. Where the trouble would have been a lot more. So this whole whatever happened, I think earlier is better of sorts.
You're calling it a bubble, huh?
I mean, it has to be. I don't know if I mean,
I know you're saying.
I mean, valuation-wise, I think it definitely. Not just India. I mean, even in the US, as it I one of our peers in the US is a company called Robinhood, right? As it was worth $85 billion 6 months back, 8 months back, whatever. It's at $8 billion today, right? As in, if it was not bubble, how is it at $8 billion? As in, it's impossible, right? So it's so I think yeah, there was a lot of excesses, and I think it is again, the problem was too much cash sloshing around, and probably the blame lies with the US government, really, at the end of it, because they kind of enabled all of this.
Okay, we're going to lay the blame at the door of the US government. But Nitin Kamath, thank you so very much for your time and for your very candid thoughts.
Pleasure. Thanks for having me on this.
Hello and welcome to ET Future of Money Summit. MSMEs are at the heart of the Indian economy, the engine for jobs that contributes over 30% to India's GDP. Helping MSMEs grow is one way for us to boost jobs and power up the economy. But they have their own challenges, and that could be lack of access to reasonable credit, lack of documentation, knowledge gaps in accessing technology. So how do you then empower MSMEs in Bharat to drive financial inclusion? Now, many fintechs have taken on the challenge, and I have with me one of them that is solving for this problem. Founded in 2017, Neogin Fintech describes itself as a young public listed company building a banking as a service platform to help medium and small businesses succeed, and it attempts to serve India's underbanked. I have with me MD and CEO Tashwinder Singh, who has almost 3 decades of experience in strategy and operational roles. He was part of the senior management at Citibank and global investment firm KKR and Co. Dashwinder Singh, welcome to ET Future of Money Summit.
Thank you, Maloney. Thank you for having me here.
So I'll just, begin with MSMEs, which, are described as the lifeblood of jobs and an engine of economic growth, contributing to about 30% odd to India's GDP and 50% odd to total exports. Various schemes have powered MSMEs. Financial inclusion when it comes to MSMEs remains a concern. Tell us about the ways in which you are solving for it.
So this is an old problem, that requires resolution. And there are various people that have tried to work in the world of financial inclusion, right? India has over 800 million people that live in rural India, pretty significant population that lives in rural India. And I think the government has done some very interesting stuff. When they started with the Jan Dhan Yojana, they opened 430 million bank accounts, right? And that was a great initiative, getting the whole India stack ready, creating the whole UPI mechanism for making payments are all methods that have been, or stuff the government has done to bring the underserved into the banking sector, right? To the formal banking sector. I think the opening of the accounts was one leg of the story. The second leg of the story is how do you consistently get those folks to start using that account as their primary bank account or their primary method for operating, which means they require the ability to get served from that bank account. I think that's the crux of the problem that we are solving. We are providing the ecosystem of being able to serve those customers who are not necessarily in the formal banking sector, even though they may have a bank account. That's really the crux. Now, how do you go about doing that, right? Our philosophy is that you build the infrastructure for being able to do that. Now, these are use cases we are developing on what the rails government of India has set, right? The India stack that's been created. We are trying to create use cases by helping people or companies that have significant number of storefronts to use those storefronts to effectively deliver banking services to the ecosystem of people around those storefronts. Right. And that's one way we figured that if you really want to bring financial inclusion in the true sense into the market, and there are multiple ways to think about financial inclusion. One is as basic as getting people to use the account. The other could be providing credit to them, right? So there are multiple things, and we can talk about all of them. But fundamentally, we are still at the early stage of trying to make sure people get to use their account and get comfortable by keeping their savings into banking account. And one of the things that they need to be able to keep their savings in the bank account is to have free access to be able to withdraw that money when they need the money, right? And that comfort is important. And for that, you need to have the ecosystem of physical and digital methods by which they can access their bank accounts. What we're doing is we are creating the infrastructure to be able to power the small Kirana retail stores, etc., which are spread over the country. There are about 63 million of those, getting them to behave like bank branches, getting them to become the points of contact for a rural individual to be able to go and access his or her bank account, to be able to withdraw money, to be able to apply for a loan, to be able to buy insurance, to be able to do all the banking transactions that what you and I could potentially do digitally or go to a branch in a city like Mumbai and do. So that's really the power of what we're trying to deliver here.
So I was just wondering, what's been the offtake of it? What's been the impact of all that, powering customers through Kirana stores?
So the impact is quite substantial, right? Think about you sitting in a small village without having the need. You want to go withdraw money from your bank account, right? You can actually go to a Kirana store today without a mobile, without a card, without a plastic. You can walk in with your fingerprint, with your thumb, and you can go withdraw money from your bank account. That's the power that AEPS does, which is Aadhaar-enabled payment systems. We provide the infrastructure of connecting that Kirana store to MPCI or to the bank or the switch through which that transaction can get consummated. Right now, the power to the individual is, let's talk about the people in the ecosystem, right? The individual is getting the ability to go access his or her bank account by going to his neighborhood Kirana store. Huge impact for them because they don't need to go stand in line outside a bank branch, right, waiting for their turn to come. Their transaction gets done in a few minutes. It saves their entire day, and a lot of people work on daily wages. Think about it, that you save them the time that they would have wasted in trying to get to a bank branch. You've killed that time completely from their day, right? Come in, withdraw some money, are able to then use the money to buy some goods. right? And guess what? He makes money as he's rolling out the cash because he gets paid a commission to effectively work like a bank. He's a banking correspondent agent where he's giving money to the person who wants to withdraw money from his or her bank account. The authentication of this transaction happens on our platform, right? So I just want to bring that clarity. The bank loves this because what we've done effectively is we've variabilized the cost structure for a bank. A bank does not need to go create the ecosystem of a branch or even an ATM network in some of the lesser populated or lesser accessible locations in the country, right? And therefore for the bank, they only pay if a transaction gets done. So you've knocked off the fixed cost for the bank and you've converted that into a variabilized cost. So the three members that are actually participating in this ecosystem, which is the individual, the Kirana store, and the bank who's basically holding the account, all three are benefiting from this proposition.
Tash, can you tell us a little bit about, the different products that you have? So you have urban tech, wealth tech, and also the rural tech product.
So, philosophically, our company is focused on MSMEs. Philosophically, we are a B2B business, right? And we are trying to solve the problems of the MSMEs. Now, there are MSMEs in all parts of the country. There are MSMEs in the urban part of India. There are MSMEs in the rural part of India. And therefore, we have different propositions because we think the requirements and the solutions required for the two markets are different. For the urban market, I think there is a lot of access that's available because a small business that's operating in a city like Mumbai or Delhi or Bangalore or what have you, there is enough and more access available to them. What is the solution that is required for them, right? There, the solutions are driven more by providing credit, giving them access to credit because India fundamentally is a capital-starved economy, right? So for the smaller MSMEs, their ability to be able to access credit is important. So for the urban India, we have a platform where we are able to help them get access to all financial products that they need for their own consumption. So here the MSME is either taking a loan, which could be a personal loan, a housing loan, or what have you, right? Or the MSME could be buying insurance, right? And they could do all of that on our platform, right? So it's a digital solution, giving them access using using a extended network of chartered accountants. We are able to provide these solutions for the urban ecosystem, right? And that's really our urban tech platform. Our rural tech platform, as I mentioned earlier, is focused more on financial inclusion, looking at more rural India and semi-urban areas of India, where we are trying to provide solutions which are also income augmentation ideas for the retail stores. So small retail stores, small front ends, where you have footfalls, people walking in, we are able to power them with financial products or capability to deliver financial products and in the bargain, make extra money. Go back, in the old days when the STD booths came into India first, right? Every small Kirana store had a small STD booth where anybody could go in and start making phone calls, right? And the Kirana store was not a main business. It was a side business. They were running their own store and they were able to do that as an additional business. Think of banking channel being a mechanism exactly the same way, where the Kirana store is doing his or her own business, selling goods, but he's also got a small counter where you can actually go and transact banking transactions on that counter. Now that requires technology for enablement, right? And that technology is what we're providing. That's our rural tech business, right? And then on the wealth tech, we acquired a company on the wealth tech side. There again, we do two things. There is wealth advisory, because we figured that there is significant opportunity for providing superlative advice, especially when you start talking about both the rural and the urban tech areas or urban markets and rural markets, right? On wealth, because wealth, I think, is underpenetrated as far as rural India is concerned, right? So everyone focuses on the urban side. I think we've got our ecosystem on trying to figure that out. The other thing that we do, being a technology company, is that we understand analytics. So we actually provide solutions to wealth advisors, which are other big banks who are providing wealth advisory. We give them analytic solutions for them to analyze client portfolios to advise their customers better. So it's a slightly different kind of business that we are doing, which is away from the main core of rural tech or urban tech, but it is one of our small subsidiaries that we acquired, and that's moving around quite nicely.
Okay. I have a question on this. You've made these two acquisitions, right, in the past 2 years. The iServe, which deepened market access to underbanked in India, and the second was also Moneyfront,
Right.
which has been integral to the wealth tech product. So can you tell us a bit about your strategy of driving growth via acquisitions? How have you avoided the pitfalls of growing through acquisitions, and the pitfalls of, say, misreading the business impact or not anticipating what comes next?
Yeah. I think the one thing I will tell you is that the one thing we do know is that we don't have all the answers. And therefore, we like talking to young entrepreneurs, right, who've thought of good and new ways of doing stuff. And that's part of our whole M&A strategy, right? That talk to smarter people, smarter than ourselves, right? Try and see what they're trying to build, and then see if there is a way for us to partner with them or to acquire them to keep expanding our business, right? Of course, they have to be sensible bolt-on ideas and bolt-on strategies. The way I think of M&A for us, right, it has to either get me a better market access, right? So it gives me a deeper market access, or it has to improve my product capability. Moneyfront enhanced my product capability, right? Because we didn't have a wealth proposition, so it enhanced our product capability to the ecosystem of the MSMEs who we were serving, right? Where some of them could have surplus liquidity, and then we could provide them solutions digitally to be able to help invest that money, right? iServU gave us both product capability and market access. They gave us market access into rural India, right? And they gave us product access of completely new products, right? The technology, the ability to be able to call ourselves genuinely as a banking as a service platform came in primarily driven by our iServU acquisition. So if I look at the future, I think we will, because life is too short and we don't know all the answers, we think we will continue to acquire companies, right? And we will acquire them early on in their life cycle, not late stage companies, because we think we can chart the path for these companies if we get in early on, along with the drivers of those companies, right? Which are the entrepreneurs who started building those companies. We have the capital, we have the capability of providing the capital to be able to fund these businesses, right? And then make sure that, we are able to then expand the product capability or the market access that we have to keep expanding the Neogen franchise.
All right. But, we are entering a really tough market, right? Like with high inflation, tumbling markets world over, and this could lead to a slowdown in business momentum. So, in this backdrop, what's your strategy going to look like? And do you plan on acquiring any new companies or launching any new products?
Yeah, so I think it's hugely an opportunistic time for us, because when you hear about the funding drying out for fintechs, for example, which is also one narrative that you hear about in the markets, right? I think a lot of homegrown small businesses that depend on capital, I think are going to struggle, right? If they don't get the capital on time, right? Depending on how bad the winter is. I think we could potentially be an interesting partner for some of these guys to come in, to the extent we think that they are value additive to us. We're not a private equity fund. We're not a venture fund. We're not just out there to fund businesses because they need capital. We want to look at businesses that are strategically relevant to be associated with us in the ecosystem that we've developed ourselves, right? So for example, if you look at insurance, right? Someone who's doing insurance distribution in an interesting way. Today, we do some level of insurance distribution ourselves. But if I was to look at an entity in that space, it could be very interesting. Or if I look at someone, we use a lot of banks give us their APIs. We are able to provide a lot of APIs. If someone else is doing that work more interestingly, we would be very happy to partner with them. There is new products that need to be brought into the market. There are new capabilities, the ability to use better reconciliation tools, ability to use better notification tools, etc. We created our own switch with MPCI. We have our own switch called iSwitch, right? That's enhancing the capability of improving the customer experience and sending transactions faster to MPCI and getting deals done better. So there are multitude of things that we could potentially look at, which could either help us improve our tech stack, right? Improve our connectivity. It could give us market access. It could improve our product offerings that we give in the market. I think we will do a bunch of these. But I think we will continue to remain focused on the MSME. I don't think we have the plans to suddenly become a B2C company. We are a B2B company, and we will continue to remain true to our path in that count, right? And that's what we will end up doing.
So I want to broad base this conversation now. And speaking of MSMEs, according to the World Bank, there is about a $380 billion worth of MSME credit gap in India. And according to the International Financial Corporation, 95% of addressable demand for credit comes from the MSMEs. And one of the reasons MSMEs are not able to access formal finances is due to the lack of documentation or credit history. Now, in this backdrop, how do you see fintechs help solve for this issue? and enable MSMEs, so that they can actually move into formal finance.
Yeah.
And
So
thereby
that's
then serve the underserved population.
Yeah, no, that's a very interesting question. I didn't mention this. We are also an NBFC, right? At Neogen, we are also a non-bank finance company, and we also provide credit, right? So when we are doing our payment business, when we are doing our rural, financial inclusion business, the MSMEs that we deal with, we are also able to provide credit to them because we have so much information because of the transactions that are being transacted on our platform. We are able to use that transaction data to be able to then provide credit to people who otherwise would find it very difficult to get credit because they have no history. They have no credit history. They have no transaction history. It becomes difficult for them to get credit. So we are also trying to create the ecosystem of going right at the bottom end of the pyramid and trying to create the transaction history by getting them to become partners on the financial inclusion side, then use that data to be able to deliver credit to them. But to answer your question, that's about us. I think the government of India is doing some very, very interesting stuff. We are living in some very, very interesting times, very exciting times, right? 2014 was when they started working on India Stack, and then UPI got launched, and that just completely changed the way payments happen in our country, right? And India, as you know, is pretty much ahead of most other countries if you look at the number of digital payments that actually happen on India, right? Last year, for example, India had almost 48 billion transactions done, which was almost 2.5 times than any other country. And China was, I think, number 2 with probably about 20 billion transactions or 19 billion transactions, right? The same thing is now going to happen on the credit side. Government of India is working on trying to create, and you would have read about the OCEN network, the OCEN network, which is the open credit and enhancement platform, where they're trying to make sure that let's build the rails to be able to provide credit to the entities in question, right? To me, I think it's a fabulous innovation, not an easy one, by the way, but I think the government has got their eyes set on getting this done. I think it'll create the window for a lot of people to start getting credit who are not able to get credit today, because there will be an open platform where you could go discount your bills, you could get the best cost of credit available and credit. And on the other side, you will have people who can provide the credit, right? Which are NBFCs, banks, etc., who could be, feeding off that network as well, which I think could be interesting. We think there could be multiple use cases we could build on top of that network as well. And I think that's one of the things that we've been thinking about. These solutions, if we work on these solutions as a standalone company, ourselves and some of the other companies, I think the impact will be much, much lower. But when the government creates a platform on which all of us can play on, then the impact is significantly higher. And we've seen that in the payment space, right? Government created the UPI, base, or the IMPS base, or the AEPS base, right? These are all platforms the government of India created for payments, right? AEPS is the Aadhaar-enabled payment systems. I think as they create the open network, I think it'll open up the window for credit being available to a lot of people. So that's the next big challenge for the government. If you really think about it, India continues to be cash-starved, capital-starved, as I mentioned. The MSMEs, you mentioned about a certain ratios, about 30%, 50%. I think the number you should think about is the employment that the MSMEs provide in this country. And employment is important, and capital is important for them to be able to sustain those employment figures, right? So I think the OCEN network is I'm very bullish on that personally. I think we have to get together and try and solve this problem. The opportunity is huge. The other way to think about life is that the lending opportunity in India is tremendous, right? How do you access this lending network? Now, technology and the question you asked was on fintech. How is fintech solving this problem, right? I think fintech is really solving this problem by thinking of newer ways of trying to reach out to customers. The problem with lending is two things, right? Well, there are three parts. There is the client origination, there is the underwriting, and there is the collection, right? I think the underwriting process, there is enough data that's now coming in. You have GST data that's coming in, you have transaction level data, you have account aggregators that RBI has now allowed. So there's going to be a lot of information available for the underwriting piece. The cost of client acquisition and the cost of collection, I think, are two places where there is some work that needs to be done to be able to make sure that the cost of client acquisition can be minimized. And using a digital method to acquire clients could be one way to reduce the client cost. And again, using digital methods to collect, right? As customers get comfortable using their own bank accounts, and there's more money sitting in banks than sitting in mattresses, you will see that will also become easier. So I'm pretty bullish on that as well. And I think fintech is going to play a very, very important part in making sure that these two costs can get reduced to make the lending viable for the final borrower.
Yeah, and really, the access to credit can, spur the economy in ways that we can only imagine. As you said, job creation remains a very important challenge for us, and this is one way for us to do so. This is my last question to you. How do you boost financial access? This is a problem, again, that many are attempting to solve. Are there any technologies that you are particularly excited about that you think could spur financial inclusion?
So a lot of things are happening, right? So for financial inclusion, if you take a very random thought, my view is that if you really get the central bank backed digital currency into India, which I think is one of the things that is at play again. I thought, I know there are more intelligent people than all of us who are sitting and working on that. But that to me could be fantastic, right? If you could provide money to people in a digital way, completely, where you could also decide where that money can be spent. Right now, there are other issues along with that which one needs to think through. But I think that could be as one of the use cases for central bank backed digital currency could be financial inclusion in a very big way. Right. So that's a new thought that would come in. Open is a new idea that would come in for financial inclusion. And the other thing that we're doing, and I think other people are also doing, is India has such a significant number of retail stores. I mentioned the number 63 million, and the number may be dated. The number may have already moved up or down. Who knows, right? Why do we need to create incremental infrastructure, physical infrastructure? We have to keep using the existing infrastructure to allow people to access all kinds of things from that infrastructure. Creating new infrastructure, creating new brick and mortar outlets are not required. We have to be able to find efficient ways of using existing outlets, whatever they may be, whether it's a Kirana store, whether it's a bank, whether it's a small store selling a barber shop, for example, or even a guy selling mobile phones. They have to be some level of consolidation of products that they can sell. We have to allow products of all kinds to be sold across these channels. Right. And that's how you will reduce, because the problem with financial inclusion fundamentally, is you have to reduce the cost out of the equation. Once you remove the cost out of the equation, it starts becoming viable. And unless it becomes viable, it's a very difficult proposition, right? Because this is not, financial inclusion should happen and work on the merits of its business, not because it's a socially right thing to do. Right? It is socially right thing to do, but it has to also stand on its own feet. It cannot depend on grants, etc., for it to get done. And that's one of the things that we want to do. We want to keep proving that companies can make money by being, by providing financial inclusion, and there is money to be made at that end by knocking off cost, not by loading more, by making your products expensive, but by reducing cost and therefore making the whole proposition cheaper.
As you put it, Kashwinder Singh, CEO and MD of Neogin Fintech, thank you so very much for your time and for your thoughts today. We wish you all the very best.
Thank you, Meloni. Thank you.
Hello and welcome to ET Future of Money Summit. I'm Meloni Bhatt. Women are excellent money managers, managing household budgets, their own spends. They know exactly what needs to be done just so that money stretches along for the family. But when it comes to deciding where to invest, instruments to save in, or even make some high purchase decisions, men take over, and very often women defer to them. Now, I have with me 3 women who hope to change that. They want women to make their own informed money decisions, taking control and to have a say in the financial future, their financial future and that of their loved ones. I have with me Chaitra Chidanand, Srinjini Kumar, Aditi Sholapurkar, 3 women who in between them have had great careers in banking, financial services, technology, venture capital, and regulation, and they're all part of SALT. Thank you very much, all of you, for joining me. And, our topic for today is women and money and why the financial future is female. So once again, ladies, thanks so much for your time. Chaitra, if I could begin with you first, you're 3 women founders. What is the problem that you want to solve and why the name SALT?
Thanks, Meloni. I think why the name SALT is probably where I'll start with, because that will nicely segue into what we're doing and why we're doing it. So SALT as an ingredient is essential to life. It's essential to cooking. It's essential in our physiology and biology everywhere, right? But it's one of the most invisible ingredients in life. And you realize you become conscious of salt, or you appreciate its value only when it goes missing in your life. And I think in many ways, it's symbolic of both women and money in society and in life, right? So that's one reason. The second reason is salt is something when it comes to cooking in almost every recipe, and this is much to my annoyance because I'm not naturally a cook. Like Shinjini is fantastic, and I think Aditi is on the other end of the spectrum. I'm a little closer to her, but in all the recipes, like they say, namak swadanusar, or salt to taste. And somebody who follows recipes, you know, by measuring every ingredient, I have always gotten flummoxed by that, right? But actually, once you start cooking on a daily basis, that intuition automatically comes to you. I think the reason I don't have that intuition for salt is because I don't cook daily. And money is very, very similar, right? If you take financial decisions on a regular basis, it becomes very intuitive and it's not that complex. And that is something that women can actually have naturally been doing for millennia, but in the recent years, when what we call as the industrialization of finance has happened, that agency has somehow been given up by them, right? I don't want to say taken away. I think it's been given up, partly because finance has moved into banking and more abstract forms, which probably involved conducting these decisions outside of the comfort of the homes, etc. Somewhere that agency has been lost, but that propensity to have that intuition is always there. And I think that's what salt is about. It's about bringing that intuition back to money and thereby reinstating agency that was always there for women to have. The last thing, which is probably one of the most, my favorite things, is salt has always been associated with revolution, like Dandi March, the civil rights movements, etc. And I think in many ways, what really drives us is somewhere we feel that reinstating this agency is nothing short of a revolution, because it, and especially for urban women, right? This is something that people miss out because we are just so usually accustomed to thinking of financial inclusion. And usually inclusion is bottom of the pyramid, poorer segments of society. Their money is an essential, and that's why self-help groups, microfinance have really worked brilliantly. But when it comes to, as you move up the income spectrum and you become more comfortable financially, somehow it's been a nice to have for women. And that's why they've been okay letting go of agency over there. But when you reinstate agency in your life over money, magic happens. Suddenly you realize you actually have choices, you have power. You can give up that job that you don't like. You can live the dream that you want to live. You can travel. You can, do so many things, right? So that restoring of that magic is nothing short of a revolution in, I think, women's lives and in their households' lives. So yeah, those are the three reasons. And that's kind of why SALT is here and led by the three of us.
And, how do the three of you kind of come about, to become part of it and to do this?
So the way the three of us came about was, so Shinjini and I met when I was doing my first startup, which was Simple. This was back in 2014. Shinjini was running the Fintech, arm of PwC. And in fact, she was instrumental in helping almost every Fintech of that era starting off in India, because she was one of these. I remember this meeting her and walking away from that meeting thinking, oh my God, here is this first human being I've met anywhere in the world, because I had lived in the US and spoken to a lot of Fintech, senior people in America and in India. But I had never met somebody who had the vision for the future and the knowledge of the past, and therefore had the ability to make the future happen in so many ways. So I think that was how I met Shinjini. And Shinjini and I, our relationship started off more as like an advisor and an advisee, a mentor, mentee, and soon we became friends. And when I decided to move out of Simple and I knew what I wanted to work on next, which was in this space, the first person I called was Shinjini. And, and then Shinjini introduced me to Aditi, and serendipitously, Aditi and I had already met when Shinjini and Aditi were working together building Paytm Payments Bank. And so she reminded me, and then I was like, yes, of course, I would love to talk to her. And one conversation, and we really, I think we had like a 2 or 3 hour conversation. And since then, the three of us have been working together.
Shinjini, let me come to you. On your site, you talk about the opportunity that the female economy offers. And, it's clear that you want to ride it. On the site, you urge that people take a money personality test. So what are some of the insights for both men and women? And how does this help you kind of decide the product rate?
So, one of the things that happened when Chaitra came to me and started to talk, and Aditi Chaitra and I had these long conversations about what we want to build, why we want to build it, why we want to build it together, who do we want to build it for. We spent like a fairly long time, 4 or 5 months, to kind of sit every weekend and talk about these things. And Chaitra had already started talking to women because she is, of the three of us, Aditi and I come from financial services perspective. We had worked on building a Paytm bank together with a very ambitious plan, and that plan included a lot of women. And so Chaitra was the one who was trying to discover this afresh. So she was already talking to women about many of these questions that she had in her mind about why is it that women don't really use formal products, why are the numbers so low. And so she said, why don't you also do a few of these interviews? And so I like to put names to things because that makes it easy for me. So I started to call them salt stories, and you'll find a lot of them on our website or our social media. And so I started to talk to women as well. And this was a great journey for us. So initially we were doing one by one, and then we did some in groups, and then Aditi came in and she started to put a lot more, thought into it in terms of using some tools and aids. So there was like a long engagement of, we went up to 500 women or so. And when we were talking to them, we realized that there were some things that were, jumping at us. And what you realize, and I particularly realize as somebody who has run a large financial institution and worked with many financial institutions in my capacity as a regulator or as a consultant, is that the woman as a consumer of finance is invisible. She is, even though it's not that she's not there, she's there, but she's not visible. So when I go to Citi and I ask for a profile of a female customer to run that business, I have a very clear profile of the male customer. I have a very clear profile of the customer, which is actually the male customer when you scratch the surface. But when I start to look at the women, I find that it's very patchy. It's very patchy because there are, so we wanted to make the woman visible. Who is this woman? Who is this customer? Who are we building for? And the series of conversations started from there. When those conversations started to happen, we realized that people had certain anxieties about money, and they varied. They varied not just according to where they were in terms of knowledge or understanding or what experience they had with finance, but also dependent upon their personalities, because people are inherently different. And you can't just personalize everything for everyone, but we wanted to still get into the problem and understand it. So the money personality test was built on that core insight that came, but then it had to be scaled for that model because it was built on a statistical model. For that model to actually begin to make sense, it had to be scaled. I'm going to hand over to Aditi to talk a bit more about how we scaled it and what insights came from that, because that's a very important part of our evolution as a company that necessarily did not start with the idea that we will uplift women. That was not our idea. We don't believe in that gender binary of saying men do things in a certain way and women do things in a certain way, or the reverse. But what we wanted to really go after was the gender gap in finance. So you know what I'm saying? That a certain type of customer who doesn't happen to be that, a person who earns a monthly salary, has a 30-year career of runway to earn, doesn't tend to get access to good quality financial products. That gap largely happens for women. It so happens today that a lot of them are women, but they're also other than women. There are other communities that also don't get that same access. So when we were thinking about it, we were not thinking of building for women. We were thinking of building for everyone who is in that same bucket of exclusion. And therefore, that test was not limited only to women. And I will let Aditi talk a bit more about how we went about doing this so that our insights, some of them were validated, some of them were sort of interestingly contradicted. And then that's how we landed into building something which is not just a product for women, but it addresses that need very largely. Aditi, would you?
started out as a conscious product that we wanted to build, right? Chaitra and Shinjini, I remember, took to these conversations like they were born to do these. I mean, they probably were. And for me, this was very new. I was not super comfortable talking to strangers for, well, upwards of an hour. And that was the funny thing, right? For most women and men that we spoke to, these conversations were very cathartic. Like they would start out as, 20-30 minutes that we would block, and they would pretty much overshoot an hour, because for a lot of them it was the first time they were talking about money, right? And that was something that just stuck with us, that for 90% of people that we're talking to, if this is the first conscious conversation that they're having with an adult about money, that's a problem. And really productizing that was what we set out to do. When we started building the money personality, and we used to call it the psychometric at the time because we hadn't even thought about marketing it, we were like, okay, what are those key factors, right? Like what's the sameness and what's the difference, right? People always talk about the cold start problem in fintech and in startups, because it's really glamorous to do that. Actually, no one has that problem more than finance, right? Essentially, you can't cater to those you don't have data on, and you're never going to get data on those you cater to. And there was such a massive data gap on one, women, and two, on how they felt and thought about money, right? So we knew right off the bat that, certain themes emerged, right? So anxiety in and out of the context of money. For example, maybe you're an anxious person, and that's why you're anxious in the context of money, or maybe it's money specifically that makes you really anxious. The same way, intuitive decision-making, right? People's decision-making mechanisms change drastically in and outside the context of money. Then certain more tactical things like your propensity to save, your propensity to what we call, free spending, essentially spend without rein. And those were factors that we wanted to sort of sum up. And over, I think, tens of iterations and a lot of very solid AI in the background, we came up with what is now known as the money personality test. So we essentially end up bucketing people into what are now the final 5 cohorts. And it wasn't always like that. We started with 3, then a few broke, and it was the typical sort of clustering journey that one takes. We've given them sort of playful names, right? You could be a sorted sauce, you could be an anxious artichoke, but behind that is really sound analysis of really what your key traits and what each person's strengths and Achilles heel are in terms of money. And what that ended up doing was, one, it ended up stirring those conversations. So we didn't really even spend any money or anything to sort of try and make this go viral. It went viral on its own. I think there was a week when everyone, we knew their entire Twitter feeds were all about people posting their money personality results, because we'd added a comic to it, and we'd done it really, really thoughtfully, but also it shouldn't feel like a diagnostic tool. What it did for us was give us, it did validate most of our assumptions, to be honest, right? And the primary ones being that women do not need to be taught about money. I think one of the biggest problems one encounters in this space, whether you talk to VCs or whoever you talk to, is the lack of confidence in the space, right? Oh, are women really interested in managing their own money? Because hey, my niece isn't, right? You'll be amazed at how often we hear that, right? Or the moment you tell someone, hey, we're building something in the fintech space and it's to do with money, without taking a breath, they say, oh, so like education and inclusion. People just assume that, women need to be taught. And we have now over 250,000 responses that prove otherwise. More than 70% women consider themselves fairly proficient when it comes to understanding, financial terminology. 85% women expressed a high degree of interest in taking their financial decisions themselves. Yet 75% of them said that they use apps for everything right up to payments, but not for any decision making beyond that. So not for insurance, not for investing. And that goes to Chaitra's points about, the industrialization of finance. Money is not foreign to women at all. It is something in the construct of formal finance and the way it's been built and who it's been built for that has systemically ended up excluding women and others, as Shinjini said. But, obviously the largest and most homogeneous group within that, it happens to be women.
Some of this I can absolutely relate to, especially the point about where you say that, women use financial products up to payments and then kind of don't go further than that, just because maybe you're cautious or you have other ways to do it. But yeah, this is tremendously interesting. But on your site, Aditi, you're not offering any product so far, right? So, what is the idea about building a community before offering products or building products?
So I'm gonna, let Shinjini take the community point, because I think she does it, better than any of us. But what you mentioned about our site, so again, very interesting. When we pushed out the MPT, and as I said, that wasn't super deliberate at the time, but we learned something fantastic. We learned how to, with almost surgical precision, target our customer. Right? So that woman in the age group of like 18 to maybe 45, who's smartphone savvy, who's urbanized, doesn't matter where she lives geographically, but she's urbanized, she gravitates towards certain things. We figured out how to get to that customer very, very strategically at pretty much no cost, right? Our app's actually been out live in a throttle beta for a while now. And the reason we call it a throttle beta is because it's not open to everyone yet. We used the same IP, the same algorithms that we built at that time to razor target that customer and to essentially give ourselves, you could say, like a learning phase of about 3 months to really, iron out the kinks. And it's amazing what it does, right? It brings down your CAC to virtually nothing. Engagement metrics are off the charts because we've given ourselves the time to really laser focus on our most intentional TAM, completely fine tune the product, and learn from them and iterate very quickly before we sort of make it available to the public and available to everyone. I'll let Shinjini take the point on community versus product.
So actually, all of us can go on and on because there's a huge amount of learning, but because Chaitra drives a lot of the community effort, but I'll just give you one very simple thing. When we started, right from the December of 2020, when we were having these conversations about what we want to do, why we want to do, how we want to do it, we were very, very clear that we were not going to build a platform for communities, and we were not going to build for financial education, because it kind of irritated us as smart women to be always taught. So, if guys have to drive, then they just go and drive. And if women have to drive, then their daddies tell them that you first learn about the gearbox and then you drive. It's bullshit. So we really didn't want to do that. We wanted to build products for somebody, because when products are good, and, both Aditi and I have been at Paytm, Chaitra has built Simple. So you understand that when products are built well, then people with intent can use them. And when they use them, then they learn and then they can keep going on. So that was our motto. It's easier said than done, and we all know that, right? But we didn't, and that's the reason that we didn't start out by saying that we'll build a community of women and then we'll understand what they want and we'll build product, etc. But what happened was that we were building the money personality test, and we put it out on Twitter, and it got traction. And then we realized that while it got traction, it had only about 35% women. A lot of them were men. And we wanted to then say, oh my God, we think there is a gender gap, but how are we going to find these women? And so we started to then experiment with, targeting, like what Aditi was talking about, targeting and finding the women on the internet. And we know that there are women because women do commerce on internet. And even though in India, like you will know, Meloni, that female workforce participation rates have come down very sharply, right? But one of the things we realized through our conversations is that while a lot of women are getting out of the workforce, and it's a sad thing, and we need to do something to reverse that, but a lot of them are finding that blurring of the distinction between home and workplace as a space is working in their favor to do, small commerce, multiple activities, and their sources of money are not homogeneous. So they're not like to that EMI structure of getting monthly salaries over a 30-year period. And therefore the product and lifestyle, gap is big, because many of them have multiple sources of income. So, they get household money from which they can save. They get gifts many times. They have some small business on the side. Sometimes they're writing blogs or creating content or doing things, and therefore there are multiple sources of income. So we wanted to actually figure out, where are these women living? What are they doing? And how can we be relevant to them? That started our community, our Instagram initiative. So that's when we decided to go very limited way to Instagram and Facebook only, and start to do some collaborations, start to, find these women, put a little money behind curating some audiences, etc. And that's how the community emerged. And the community became very vibrant because, we have good design people, and we have fairly good, I should leave that to Chaitra and others to talk about, but I feel like the team did a really good job of creating a language which people were able to relate to. And so I'm really grateful that we ended up having a community, but that's how we wanted it. We wanted product first. We want to be, and we will be, a product first company. Okay.
Chaitra, while digitalization has helped massively, there is also a very deep digital divide, especially in India. While everyone needs help in better managing money, people who need it most are very often the ones without access or without means. So I just wanted to understand, do you plan initially to reach, your target, audience in villages, or, perhaps women who are older? And, how do you plan on doing it, given that there is this deep digital divide?
So Miloni, when we started off, right, that was our assumption too, that the digital divide exists, and the digital divide affects the people in tier 2, tier 3, or villages, rural communities, etc. But the more we started talking to women, we realized, or just generally anybody, right, we started realizing that the need was fairly acute, even in the digitally savvy or digitally present communities, especially when it comes to money, financial products, and being able to purchase them and make decisions around money, right? So then automatically the natural, progression of that journey was that, why don't we build a platform that caters to this audience, which is, as Aditi described it earlier, the urbanized Indian woman. And it's almost like create something that works for her. And because she's a very discerning customer, right? She is hard to please and hard to win the trust of. In the process, when you cater to somebody like that, you automatically end up creating a product that is superior, that is aspirational, and therefore it makes propagation to other segments, including men, including people from other demographics, much more, flowy, as opposed to, having to put money behind it and pump marketing dollars, right? So we wanted to create something that would be a pull platform as opposed to a push platform. And I think that is what we are attempting here. And the best part is, so far, some of the, we do a lot of user conversations, right? The people who are part of these throttle beta, the users, we talk to them. And the adjectives that I hear are, oh, your app is very warm, it's welcoming, it is, it delivers content in a simple way, but without patronizing me as a user. It helps put me in the driver's seat. I never feel talked down to, which is what I feel when I talk to my RM, or when I, go and try to get some advice from the nearest member in my family who will tell me what to do about money. So building for that urban audience, and from there having it propagate outwards to all the others, is the strategy that we are doing.
So if I can add to that, Miloni, one of the things is that when you, and this is a little bit of an hypothesis, and we are in the process of testing it out, but when you work in the space of women, you realize that there is an interconnectedness. It's there in the world of men as well, but it has been commercially exploited already. But in the space of women, you realize that women, as they acquire more powerful positions, for example, in organizations, then they create that role model effect, which pulls up more women, hopefully, and and that's something that organizations keep trying, but also women-owned businesses, right, that employ women, and then those women who then run their families, and then what I like to call the aunt and niece effect. Like if I am a girl living in Bombay and I use something and I find it cool, like let's say Nykaa, right, or a skincare product or something, I'll call my aunt in Indore or Bhopal or Patna and I'll say, you know what, you should try this. This is really cool. And so somewhere that interconnectedness is something which begins to work if you build that aspirational and easy to use and cool product. It is also possible to do it exactly in the reverse, which so I'm both Chatra and I don't know so much about Aditi, but microfinance is a very favorite product in terms of understanding what has really worked, right? Because that industry dedicated itself to that client. They never really worried so much about anybody else. And so we realize that it's possible, but we are really going to focus on the approach that Chatra just talked about, which is to say, build the best product, build an aspirational product, build a product that's easy to use, have non-verbal communications, and then start propagating it through communities, because that interconnectivity exists, right?
I was just saying that we've seen that play out in the way the money personality test propagated.
Right.
We have seen that the network effects that we get from women, to Shinjini's point, was 4 times higher than the network effect that we saw with men. And that propagation today, when we do a lot of customer calls, we speak to a lot of people whose preferred language of communication is Hindi or their regional language, but they are comfortable in English, comfortable enough to use an English-based app. So this digital divide, I think, is a lot less stark and a lot more, I guess, fused than we realize, is what even we are realizing as we start talking to our users. So there are people in Bhopal, in like tier 2, tier 3 towns of India who have taken our tests, and our money personality test was purely an English test, right? But so even we are surprised at. And actually, in hindsight, it doesn't surprise us, because in most of English as a, there's a base level of understanding. Yeah, English as a language of business is quite common in India. And so you're able to navigate through applications and, your day-to-day life going by these with English. But when you communicate, you might prefer to speak to somebody in Hindi or, in your regional language.
Okay. Aditi wanted to say something.
No, I was literally going to tell you about the network effect. So I was laughing when Chatra said it. Same thing.
Okay. But, Aditi, all of you are, women who've come from great careers. Now, all of you are businesswomen having your own startup, and perhaps that might have made you acutely aware of how tough it is to get business finance and access to credit. And of course, there is a huge gender financing gap as well. Is there any plan on making that credit journey easy for women to run businesses? Why are your plans?
Actually, your question touches upon a very sort of astute underlying aspect of doing anything in financial services, right? Financial services, first and foremost, and it's a good thing that it is regulated, right? Which means there is always going to be a little bit of inordinate power that the supply side holds. And in fact, even to sort of your previous question on why did we start with the customer segment we started on, it was exactly for this reason. It's easier to incentivize the supply side to produce something for a certain type of customer, because even if everything's unfamiliar, that's less unfamiliar than the rest, right? And I think in terms of really incentivizing the supply side, I think credit is the toughest, right? Shinjini can tell you crazy stories from her time at Citi, and I hope she will. But it's been my observation too, exactly what you said about financial knowledge and tools. The same goes for credit. People who really need credit are the ones that usually don't have access to, right? And that's not typically for a lack of underlying financing power or underwriting power. It's typically for a lack of having good credible data on that customer, right? Now, I think when the wallets started, and I think Chinjini and I were lucky enough to sort of, be at Paytm just when, things were peaking and everyone thought, you could replicate the China model of just having almost an alternate data economy, right? Where you know literally everything about a customer based on their digital footprint. But, everyone knows that things quite didn't exactly pan out the same way when it came to fintech in India, right? And so I think what women suffer from, because of all of these factors coming together, right? I think you guys just spoke about labor force participation. So women, they move out of the formal workforce and they're going to become, freelancers, sole proprietors, etc. That's suddenly one data point less, right? There are a lot of credit instruments even today that require sort of like a male member of the family to be like a guarantor and so on and so forth, right? So it's a combination of, I think, lack of data on the customer, lack of confidence on the customer, and I think somewhere forth, it's relatively easier to move into credit after you establish that data footprint, for that same customer. So is it on the cards? Definitely yes. Is it something that we'll do starting out? I think no as of now.
So to add to that, actually, it's very easy to start with credit if you want to, because giving credit is the easiest thing, right? So you can have your capital, or you can just raise some money and you can give credit. The challenge is, like Aditi said, why will a financial institution which has the ability and obligation to underwrite all credit in this country, because I actually can't, even if I know how to, I can't. I have to have that licensed entity do it. What's in it for them? Unless I can actually expand that ecosystem, give them something incremental and additional. And definitely we will do credit, because we see the opportunity. As you said, there is a gap, there is a need. And so we will get to that point, but we will get to that point when we can add to that ecosystem, right?
And speaking of the data footprint, so we've created this budgeting tool called Passbook, and it's probably the world's first natural language processing based, NLP based budgeting tool. And you can like literally type pizza with friends, put a smiley, 500 rupees, and that converts into a database entry, and it classifies it as eating out, and it puts tag as pizza and friends. So tomorrow you can see how much you spent on pizza, how much you spent with friends, and it's literally effortless, right? You can just say yesterday and it'll pick yesterday's date. You can say last week and it'll pick last week's date. So it's the most easy to use budgeting tool. And we have seen the uptake in people, in the entries that people, and the one of the core aspects of that Passbook is it stems from those early conversations with women where people were getting stuck at literally the macro level. I kind of know how much I earn every month. I know what my salary is. I know what my take home is, but I don't really know how much I spend, how much I invest. I don't have like this consolidated view of my cash flows and my assets and my liabilities, right? So Passbook kind of was born out of that dream of creating a dashboard for visualization and tracking of your status of your money status, right? Your money life today. And one of the core features used in Passbook by people is estimates. So the first question asked in Passbook is, what is your rough income estimate? How much do you spend every month? How much do you invest? How much do you save? And almost, I think that's the highest used feature. Not I think, it is the highest used feature in our app today. And people are coming and self-declaring that data. And then they go on to start tracking some of these spends that they're making, investments that they're making. And now we are adding layers of automation to it. You can add your bank statement. You can, a few months later, add your cash statement. So the beauty is, like Aditi said, by starting with this approach, I think credit becomes almost super easy, and to deliver it in a way which is market expansionary for our supply side partners becomes like, probably we are looking at 9 months to a year down the line, and we'll be in a very good position to do that.
How to you? I have this last question now for all three of you, so take your time to answer. Maybe Chaitra, you can begin. In India, as you pointed out, women are falling off the formal workforce. We still have to contend with a wage gap. in most circumstances, women are not able to advocate for themselves. So, when you see all of this around you, how do you see India's female economy shaping up, say, over the next decade? Where do you see the green shoots and where do you see the big challenge?
Okay, so I'll give you my dream and I'll tell you that in connection with SALT, right? And I shouldn't say my dream, it's our collective dream, because we've been talking about this for the last 2 years. And I think, so when we talk about community at SALT, I think the way we are looking at propagating that community is not a community of end customers really, but a community of people who can be influencers and champions within their communities, right? Who can actually, it's about creating a group of, let's say, in the next few months to a year, 200,000 women who can become financial experts, not just for themselves, but for their micro communities. And in that process, have an income, because there are a lot of, I think whether it's in India or anywhere in the world, right? There are life events that make women want to opt for a flexible lifestyle. So, you either you have kids, you move because of marriage. And I think instead of targeting, like at least the thing that we think we can address, we can solve, is there are perfectly qualified women who have great degrees, who have great educational qualifications, but they are sitting at home and feeling unfulfilled. I think one of the things that SALT can do and will do over the course of the next few months is aggregate them onto our platform to become these champions, resellers, call it like whatever, and become almost micro entrepreneurs, right? Who can further sell and propagate financial products and services within their micro communities. That's my contribution to this answer.
Yeah, every time Chaitra speaks, I have to think of RBI and SEBI and IRDA. And think of how do we make this work, right? Because it is an extraordinary thing that, yes, these women exist and everywhere. So, I have 2 homes in villages. I have 2 homes in small towns. So I travel a lot. I don't know if anybody who knows me knows that I do like long road trips. I talk to random people. So one of the things I do realize is that women everywhere have this opportunity and ability to become micro entrepreneurs in their ecosystems, and they take that opportunity and they do those things. In the space of money, it becomes hard because you have to contend with regulation, you have to pass exams and things like that. It requires handholding. Also, if you are in a community permanently stationed, because women are less mobile and migratory than men are, then you do something and the market goes down and everybody's money is lost, and now you don't want to face people and it's kind of embarrassing. So it becomes as an inhibitor for you to enter into that space. Even if you want to, you know how to do this. So we do want to empower that ecosystem through what we are doing, and that's one of the ways in which we will do this, right? We will build the female economy, because if you don't have females with whom females can go and talk, that conversation about money does not happen. That gap does not get identified, and then that gap does not get fulfilled. And I always share like this personal story where my grandmother borrowed 20 rupees or 50 rupees from some woman in the village to give it to my mother, so my mother could go and take up the job, because my grandfather was against her taking up a job and my father couldn't afford to give that 50 rupees. And so my mother so all of our financial future was made because that one woman was able to lend that 50 rupees to another woman, because my grandmother would have never gone to another man to ask, nor would a man have given. And while the reality for a lot of us and our initial target market has changed, the fact remains that a lot of women that live that life even today, and not just in poor or village backgrounds, but in urban rich families where everything is there. But I know friends who can actually take a first class flight to Dubai and go and shop for themselves as much as they want. But if they were to say that I want to invest, whatever, $10,000 in a company, they would need to jump through multiple hoops of their husband's accountants, their husband's accountant's accountant, and their juniors to be able to take that decision. Similarly, you could go and buy art worth millions of dollars, but to take a financial decision worth, $100,000, you would need to jump in. So this is not about gender gap is not about poverty. Gender gap is about gender. So we need to, so when you talk about female economy and how we will help it, some of it is simply through this process of creating this small way for women to own a little bit of their money themselves. So I know many rich women who wouldn't, I don't intend to make them my clients, nor would it be appropriate for them to be my clients. But if they wanted to manage a small purse, a small kitty of a couple of crores for themselves to do small things, they could do that, right? That should become easy. It should become easy for any woman to have money and have that access to their own money. But the most important way in which we need to aid this female economy is by having a lot of these young women, but in particular, who are now trying to stay independent of the baggage that they've seen their mothers and their aunts have, and therefore do things. So when we spoke to young women, they said very interesting things. Like one young woman said that, I want to start out investing in crypto because when I invest in crypto, my dad doesn't have a view because he doesn't understand a thing. If I want to invest in the stock market, then everybody gives me a lecture. So, right or wrong, that confidence is important, right? It's not important where your money went. Your first, couple of a few thousand rupees or even a lakh rupee getting invested into your education is not a wrong thing at all. But somehow that's a normal for a man, but that's not a normal for a woman. If a woman goes and puts money, like if you buy a pair of shoes, that's 10,000 rupees, and you wear it only once in your life, and then you give it away after a year, nobody will ask you one damn question. But if you invest 10,000 rupees, God forbid, into a mutual fund, and the market went down, and now it is like 7,000, God forbid how many answers you have to give, and it just breaks your confidence. That is a place where we can play. A lot of young women express the desire to buy insurance for their parents, for example, right? Because it's not a role expectation from them at all. The role expectation is from a guy to buy insurance for their parents, but not from a girl. Girls want to take that position, sometimes because they are the only daughters, or they are only two sisters, because that's a demographic reality of our times. Sometimes because they just want to do it. They want to assert their right over their own households. The second thing that's going to happen is that a lot of people will inherit wealth, because our generation would have built the wealth. So even if our children are, communists or anarchists, they will end up having money. And when they have the money, they will have to learn how to deal with it. So we have a very strong conviction that personal finance will be the biggest trend of our time in the next 10 years. And disproportionately, a number of women will benefit from that. And that's why you are seeing so many financial influencers that are women or that are addressing women. And even though we will not build that ecosystem, we will benefit from that ecosystem, and we will benefit that ecosystem both ways, right? So it's a good relationship that we will build. And therefore, the female economy, partly because of this alignment of home and workplace, which was a fundamental reason why women got excluded from workplaces, because you leaving your child and going to downtown to work was not working out. And therefore many dropped out. And none of this will change suddenly. None of this will happen overnight. And we all know it's very hard. We all know patriarchy is very hard. Once it takes hold, it just does not move. But the fact is that money is at the core of life. And many of the power equations change with money. So if female economy has to grow, has to prosper, which it has to, then ownership of money is very, very important. And that's how we think we will fuel the economy. Long answer, but I think we are very passionate about it.
But very apt, very apt. So, Aditi, you have the last word.
Oh my, okay. I always like to draw an analogy to another industry that I'm very, very passionate about, the beauty industry, right? If you look at how that industry has just metamorphosized in the last 10 to 15 years, 15 years back, I think, when I was a young teenager, the beauty industry talked down to you. It told you what was beautiful, what was aspirational, what was worth being like. And that's it. There was nothing else that existed. And then came YouTube, and then came these influencers, most of whom were women, a lot of whom were, gender fluid people that found their identity through beauty. So pretty much everyone, that had been sort of excluded in some shape or form. And those women came and I shouldn't say women, those influencers came and they changed the way a multi-billion dollar industry does business. Those same brands that were telling you 15 years back, here I have 5 shades of foundation. If none of these match your skin, that's on you.
So
Are
bad.
now bending over backwards and saying, here is our 45 range skin inclusive foundation shades, right? And how did they do that? They did that by making 10-minute, 30-minute, 1 hour long videos where they spoke with very palpable authenticity and relatability, and they spoke honestly, and they won the customer's trust, and communities got created within minutes and within seconds in those comment boxes, right? Someone once asked us a long time back, how are you really going to create communities within women? And I wanted to say, have you met women? but that's exactly what happened, right? Communities aren't created, communities germinate, and the typical ingredients are trust, authenticity, and relatability. So look at the power of these micro influencers. There were people sitting at home that were deeply passionate about something, and the entire ecosystem bent to their will, essentially, because they suddenly became visible. If I had to envision what my dream, what our dream for the female economy, and for what SALT should be for the female economy, is exactly that, right? Bend the will of an entire ecosystem that doesn't understand you, to which you're not super visible, to suddenly start seeing you for the very formidable force that you are.
It's wonderful to hear these words. And really, I wish you great success, from the bottom of my heart. And I really wish that, things are different, for this generation and for the generations to come. Women, gender fluid people, and everyone is able to take charge of the money, live the life, and be part of good decisions for themselves, their families, and ultimately benefit the community. Thank you so very much, Chaitra, Shinjini, and Aditi, for joining me today.
Thank you so much.
Thank you, Maloney. It's
Maloney.
been a pleasure to talk to you, real.
We are helping migrants who migrate to the new country get access to credit cards, bank accounts, financial services in the new country based on their good credit history that they've developed in their home country. So that's what we want to do. So the vision of the Zolve is to build a financial world that goes beyond borders. We are in the business of facilitating money movement across the borders. To begin with, we are focusing on the India to the US corridor. When people migrate from India to the US, either for work or for education. Currently, how the market is that whenever people migrate, come to the new country, in the US, since they don't have a local credit history, they end up being treated as high credit risk individuals, because of which their access to credit is limited, and whatever limited access to credit that they are super expensive, right? And having a credit history in the US is super important. It helps you in getting loans at a very low interest rate. Insurance premiums are at a lower rate. Finding accommodation, even the landlord checks the credit history before they give their house for rent. Even potential future employers also checks the individual's credit history before they start giving out employment offer letters, because of which is extremely important. But most of these migrants get stuck in the chicken egg problem, where they don't get access to credit products because they don't have a credit history, and they can't build a credit history because they don't have access to credit products. So currently what people do is, even though the initial set of credit products are super expensive, they don't have a choice but to take these credit products and slowly and painstakingly build their credit history spanning 3 to 4 years. What we realize is majority of these people have a great credit history in their home country. Just because the financial institutions in the US doesn't talk to the financial institutions in India, there is a risk arbitrage where a low risk individual is treated as a high risk individual. That is what we are using as an opportunity here to help these migrants moving from India to the US to get access to their credit history. So that's how things work. So we've been operational since August 2021. So started focusing on the fall 21 students, the spring 21 students, on also the working professionals who are going there. So initially we wanted to do a product market fit with 500 migrants moving from India to the US. We got 50,000 signups because there is no next best opportunity, and usually migrants know each other, right? So the phenomenal word of mouth, and we got a lot more signups than what it is. And not just that, right? For the spring students, we got 75% market share. We were able to get so much of market share primarily because the problem is real, and there is no viable solution for these guys. And what we are providing is kind of solution to this. And unlike other neobanks, so we are a better place primarily because our business model has a very uniqueness to it. We acquire customers in India just before they migrate. And because of it, our cost is in Indian rupees, and we make revenues in US dollars. We provide these customers a bank account, debit card, credit card. As of now, on the credit card, the 2% interchange the merchant pays, that comes to us as revenue. So cost is in Indian rupees, revenues are in US dollars. The model is unit level profitable from day one. And over a period of time, we want to make this into a platform where people come to Zoll, right? So they get access to bank account, debit card, credit card, right? And along with that, they get access to remittances, then investments in the US stocks, investments in US crypto, wealth management, help them in opening up NRE, NRO accounts back in India, access to loans and insurances in the US. So we want to build a whole platform for customers to interact. That is what we have done as part of Zoll. Going forward, so currently it's operational between India and US. For a period of time, we're looking at migrants traveling from India to Canada, India to UK, India to Europe, India to Australia, right? And over a period of time, we'll do Canada, US, UK, US, LATAM to US, right? And eventually we want to be that platform where people migrate anywhere to anywhere. They should not be too far away from their financial positions. So the entire vision of Zoll is to have a single Zoll bank account, and people can travel all across the world without having to worry about managing their money in their new country. That's the vision that we are talking about. In terms of execution, as I rightly mentioned, as I previously mentioned, in the last 10 months, we've been able to get a huge chunk of the market share. We have more than 300,000 signups on the platform, right? And we are 10-month retention is close to 90%. So people are using us. People are using us extensively. People are referring us. 80% of our customers comes through referrals these days. So that's been the thing. And moreover, a lot of people from different countries are reaching out to us and asking us, why are you restricting this only to Indians coming from migrants coming from India? You should help other migrants also who are coming from different countries to the US. Right. So that is something that we are taking up this year. We're looking at migrants from different countries lining up in the US and extending the same services that we offer to our Indian immigrants to the immigrants across the world. So that's the future that we are looking at. So while building Show, we have raised 2 rounds of funding. We raised a seed of $15 million from the with Axel Partners and Lightspeed Ventures. And we raised a Series A last year, end of last year, led by DST, Tiger, Alkion, right? And even partners of Koto and SoftBank are also part of the venture. And so we have a great set of investors. We have a real problem, and every year migrants keep migrating to different parts of the world. So we are looking at helping these people to sort out all the differences. The vision is to really make money movement across the world a lot more easier. So currently, what we offer our customers is a bank account, a debit card, and credit card. And we offer these products to our customers while they're still in India before they board their flight to the US. And we are able to do this because most of the banks in the US need SSN to open up bank accounts or provide credit cards and things like that. So we don't need SSN. We use the US visa issued by the US government as a unique identification. And we do the KYC around that. And we provide these bank accounts, debit card, credit card to our customers while they're still in India. So we are the only ones who who have the ability to provide that, and nobody else does that. So this helps a lot of our customers because they don't have to carry cash while they're traveling, and so they can open up the account, fund that account, transfer money from their Indian bank accounts to the US bank accounts, and let the money wait for them when they come to the US. So they don't have to book up appointments with the US bank after they land up there. They don't have to stand in the queues, and they don't have to worry about not having a credit history or setting up a security deposit to really start there. So that's what we do. In terms of funding, we raised 2 rounds of funding. We raised a seed round of $15 million led by Axel Partners and Lightspeed Ventures. Right, and over a period of time, once we went live, we raised a CDC of $40 million led by DST along with Tiger and Alcon Ventures. Partners of Kotu and SoftBank also participated in them, and obviously the existing investors, Axel and Lightspeed, also participated in the round. And given that the model is unit level profitable, so on burn rate is extremely low. Majority of the money that we have raised it's still in the bank. And given that our marketing expenses are on the lower side, we are able to generate more revenue per customer than most of the other neobanks. Some interesting insights about our business model. As the point number 1 is we acquire customers in India, because of which our cost is in Indian rupees. We make revenue in US dollars because our customers are going to use the products in the US. So cost is in low value currency, revenue in high value currency. The model is unit level profitable from day 1. Secondly, majority of the neobanks across the world are focusing on subprime customers, the kind of customers who don't have much wherewithal in paying for services. But we are actually building a neobank for super prime customers who are traded as subprime as soon as they enter the US. And these super prime customers have wherewithal to pay for services. If you look at it, right, an average US household income in the US is around $65,000. But the same thing, an average annual household income of an Indian household in the US is around $135,000. Twice that of the average US household income. So these are super prime customers. Just because the banks don't have much information about them, they end up being treated as subprime customers. The third thing is the new banks struggle to become the primary bank accounts across the world. But since we provide these bank accounts and the credit cards while the customers are still in India, right? As soon as they land there, on day 1 when they join the work, they provide all bank account as the salary account to their employer. So we start off as a primary bank account, right? The salary starts getting deposited in our bank account. And secondly, since we provide the credit card while they're still in India, as soon as they land up in the US, right? So they put our credit card in Uber, Lyft, Amazon, Postmates, DoorDash. So we start off as a primary credit card also. Right, so where other banks are struggling to become, other new banks are struggling to become the primary bank accounts and the primary card. We start off as a primary bank account, the primary card for the super prime customer with a great unit level economics. That's the business that we are into. That's the reason investors such as Axel, Lightspeed, Tiger, Kotu, SoftBank, DST are interested in our business. And moving forward, right? So even though we started off with this, we introduced remittances early this year, so that as soon as people open up the bank account, they can fund the account so that the money can be waiting to will wait for them before they even get there. So most of our customers are using remittances. For a period of time, we want to launch other products also, make the entire solve as a platform, and adding loans, insurances, investing in the US stock market, investing in the crypto markets, right, wealth management, and also help them in opening up NRD, NRO accounts back in India, right, and help ease the money movement across both the countries. So that invariably adds into the vision of Zolve, where we are looking at building a financial world that goes beyond borders, where we facilitate money movement seamlessly across borders. The entire thing is to empower every individual or every entity an opportunity to participate in the global markets. That's our endeavor. That's what we are working towards too.
I'm Aishwarya Jaishankar, co-founder of Hyperfees. Hyperface is India's first credit cards as a service platform where we help every brand create their co-branded credit card in a faster, scalable, compliant, and most importantly, in a way that's truly delightful and innovative for the customer. So what is our benchmark really? We are inspired by Apple Card and we want every brand in India to be able to create an Apple Card of their own. Hyperface is today partnered with AU Bank and we are partnering with more banks to make co-branded digital cards a really easy plug and play offering for every digital brand out there. Co-branded cards have existed for over 3 decades, right? Your father owned a IOC credit card. You might have seen a Shoppers Stop card. Of course, off late, we've all seen the Amazon ICICI card, Flipkart Axis card. What really is changing? Honestly, while it looks like there are a lot of credit cards in the country, it has been limited to the top 2-3% of the population. We only have 77 million credit cards issued in India. Now compare it with over 900 million debts. And co-branded credit cards, interestingly, is where the key growth is coming from, because today 63% of customers are who are buying online and e-commerce are credit card customers. This creamy layer customers data is what brands like an Amazon, brands like a Flipkart, brands like a Zomato are sitting with, and they have been able to create some really interesting co-branded credit cards programs in the market, which has sort of stoked the interest in this product, which like I told you is an old product. Now with the digital first approach, a product like an Amazon ICICI, which is one of the fastest to cross 2 million cards in India, what it has helped achieve, the whole digital channel, is greater customer reach, simplified onboarding journey, stronger value props. Imagine getting an instant Zomato cashback versus waiting for your statements and reward points. So in the generation that demands instant gratification is getting that in these modern co-branded credit cards. And if you look at various segments, a market like United States, 40% of cards issued are co-branded credit cards. In a market like India, it is not just e-commerce. We see brands evolving in shopping, in dining, in lifestyle, in hotels, in travels, even fuel. We have about 190 million online shoppers in the country, which is expected to grow 15x, and 81% of Indian shoppers are always looking for value. Now, what better than a co-branded credit card to improve value to your customer and create better loyalty and stickiness? When you create a co-branded credit card, which gives an additional point or an additional cashback or an additional discount, you're ensuring that the customer comes back to your brand because they hold your co-branded credit card. The second thing that co-brand helps you achieve is obviously higher sales and increase customer retention. A customer who is the fan of an airline co-brand card is more likely to opt for that co-brand card than any other brand. Most importantly, in the digital world where brand salience has become important, a co-branded credit card sitting in the customer's wallet becomes a biggest inducer for the brand to drive their brand visibility. Brands can also understand more about these customers by working back closely with banks. Brands can create a new revenue stream, and most importantly, a fantastic co-branded credit card program can also help brands attract new customers, right? Because your loyalty is being rewarded and it is converting into value for you is the biggest excitement a customer could get in the modern days. But getting a co-branded card is not easy at all. You have to find the right bank. You have to work with multiple vendors of the bank. You have to build out a back-end and front-end experience. The value proposition, as they call it, is it a cashback? Is it a reward point? And most importantly, getting all those APIs and making it work. All this is definitely not easy. And this is where Hyperface comes in. The second part that's very difficult in a co-branded credit card is running a program. It's very easy to issue a card that says spend 10,000 every month and I'll give you 4 tickets or 2 vouchers or whatever. But imagine nudging the customer every day for it. Imagine telling the customer what's going on the card that they have taken. And most importantly, the customer shouldn't be running to different partners of yours to understand how they can avail these benefits. This clearly is what is today happening, right? When creating a co-branded product, while what in terms of concept, every co-brand and brand wants a fantastic offering, what actually happens is a very complex onboarding process. Customers do not have a single interface to see what is going on to get their benefits. And there is very little integration deeper into the brand's program except the logo on the card. Things like cashback and reward points get credited after 30 days. And like I said, customers have to run to multiple places to get what they want from the co-brand program, leading to a very diluted customer experience for brands. This is where Hyperface comes in to elevate the co-branded credit card experience. Hyperface empowers every brand with the technology to launch a co-branded credit card program that delivers value to all stakeholders, be it the bank, be it the customers, be it the reward partners. So with Hyperface, trust me, your integration for a co-brand is as low as 1 to 2 months. All you need to take care of is what is the value proposition for the customer. The integration with bank, the compliance with bank, the commercials with the bank, the customer experience. We offer touchdown SDKs and white label PWA for you to create a fantastic co-brand experience. We integrate directly with over 4 partners for rewards and loyalty solution delivery. So your focus lies on how do I create a great co-branded card program for my customers. So in Hyperface integration, what your customers need is what they get. We offer you a very simple digital onboarding. We offer the very friction-free offer and execution with the respective partners. We provide delights like real-time transaction enrichment, seamless integration with most used and popular brands so that you can give the best of offers to your co-branded card customers. We provide a single interface for you and the customer to log in and understand what's happening on their co-branded card program, and all without you having to wrangle and struggle with complex tech systems of multiple banks and partners. Most importantly, we bring down your effort by almost 90%. We deliver higher customer retention for you and newer possibility. We help you build a customer-centric card program that ties in with your business model. So if you're a value-based grocery platform, how can you give a better cashback there in your co-branded card is what Hyperface will solve for you. We do this through technology, customized and saleable solutions, and a completely plug-and-play model that allows you to go to market super fast. How is all this happening? We've got our powerful pre-built module that do the heavy lifting for you and offer these delightful features to your customers. Hyperface at its heart runs with the smart engine. We offer smart APIs, we offer smart onboarding, we offer smart engagement tools, and lastly, we offer a pre-integrated smart benefits engine. With all this, launching a co-branded credit card is as simple as launching any plug-and-play solution. So if you're a brand waiting to offer some fantastic fintech program for your customers, Hyperface is the place that you should talk to. And we are very grateful for the opportunity from ET team to showcase our innovation here. Thank you.
So welcome to the ET Future of the Money Summit 2022. Today, we have seasoned entrepreneurs and executives joining us from the blockchain space. And we are here to discuss how blockchain is revolutionizing the finance service industry. Our first panelist is Kavya Prasad, who's the co-founder of Lumos Labs. She's also an early stage Web3 investor and an evangelist of the space. Next, we have Tarusha Mittal, who's the COO and co-founder of Unifarm. Tarusha is a seasoned blockchain entrepreneur who has co-founded multiple tech-focused ventures. Next, we have Pranav Sharma, the founding partner at Woodstock Fund, which is focused on investment in distributed ledger technology. Pranav comes with over 15 years of experience working in both traditional and decentralized technologies. And finally, we have Adrian John-Class, CFO and COO, as well as the head of research at Covalent. He has over a decade experience across multiple ventures, including starting a regulated security token platform in 2017. Thank you everyone for joining us. So let's dive straight in. I'd like to begin with the potential of blockchain technology. We know it is the foundation of cryptocurrencies, but countries and banks across the world have had a mixed perception of crypto. But they have started accepting and acknowledging blockchain technology as an area of untapped potential. What are the kinds of scalable use cases we could see emerging in the next few years in the financial sector and beyond? Maybe, Pranav, we could start with you and the others can chime in.
So, so first of all, thank you very much for this amazing opportunity. Great panel here, and especially with women, being there, it just represents what Web3 has as a potential. It is just a great space for inclusion and expression on a massive scale. So I just want to start by making that point that this is a layer of technology which is very different from the other emerging technologies, and has the ability to A, permeate, and B, bring expression inclusion on a massive scale. And from that point of view, what I mean by expression is that you see NFTs, metaverse, games, etc. These are phenomenal spaces for expression. And so in many ways, we are stepping into marketing 2.0, consumer tech 2.0, whatever you call it, which is more borderless and a lot more, you can say, wherein you can express and you can also monetize and have your own data, etc. So this is one space. The second space is a lot more about inclusion. Inclusion is about let's say finance, where let's say there are a lot of have-nots. Still in India also, there are a lot of people who are unbanked in many ways, and phenomenal work done by the government in terms of building the right kind of policy structure and creating spaces for, the last mile benefit. But how do you ensure that the assets, stay within the hands of the end user and they get judiciously, deployed as per their own will? And how they can find innovative pathways to participate not only in the agreed, or let's say the popular streams of engagement, but also sort of international spaces, international applications systematically. So in many ways, from that inclusion perspective, as an inclusion of having your own assets, and B, in terms of having the wide variety of applications that you can access, all of this is enabled by Web3. So I'm just sort of opening up this canvas by saying that when people look at cryptocurrencies and they label this as Web3, or they label this as blockchain, then they're making a huge mistake because they're missing this fundamental point. This is about inclusion expression on a massive scale. So the possibilities from application standpoint are galore.
Right. Tarusha, do you want to share your point on some of the scalable use cases you see emerging in the next few years?
Oh, absolutely. And again, thank you so much for having me on this panel. It's really lovely to see all these familiar faces. Regarding use cases, as Pranav made a very good point that which kind of alludes to the industry conversation that we have had at BACC as well, that, usually Web3 is being equated with crypto, at least in the narrative that we have in India, which is perhaps not very good for the ecosystem. It's a little detrimental to the narrative that we are trying to create, which is a little beyond speculation, a little beyond exchanges. We're looking at real use cases. So, the kind of use cases that I see emerging, as Pranav mentioned as well, that there are, NFT use cases, there is the metaverse, and there is also the DeFi space. So, with DeFi, I see it progressing and creating like, a parallel financial system, which is more inclusive in nature, which kind of gives the people who are, as a prerequisite, they are kind of, because of prerequisites, they kind of stand rejected from the traditional financial world. They can find space in the DeFi space, the kind of financial system that we are creating with DeFi. In terms of, NFTs, I see decentralized IDs and, gaming, a lot of use cases in the gaming space as well, vis-a-vis NFTs. Same is the case with Metaverse. Metaverse, I think, has already kind of made a mark. There are so many blue chip companies that have actually, started investing and looking interestingly at the Metaverse, and they're advertising and they are looking at components to sell online in the Metaverse. So I think these are some use cases that are, it's a dynamic space. It's constantly moving and evolving forward. It's very hard for me to say where will we land, but the outlook looks really good, because now as an industry, we are looking beyond crypto and we are looking beyond exchanges. We are actually looking at use cases, and solid platforms have come up that are actually trying to solve a real problem.
Right. Kavya, what do you think?
So first of all, thanks for having me on the panel as well. And I couldn't put it better than what Pranav and Tarusha just said, right? The kind of use cases that you can think of with blockchain technology are immense. But as you know, as your question stated, which was predominantly in the financial sector, I would say blockchain mainly in the financial sector allows for transfer of currency with the confidence that it's secure, reliable, and transparent, right? So with that in mind, for the financial sector, there are some that are already being implemented in the government. There are talks of actually launching a CBDC in the coming year, even by the government of India itself, right? So these are a couple of use cases of blockchain technology that are being seen. But that apart, I'm going to be excited to see more blockchain use cases within the government itself, right? Like government expenses that are probably transparent, where we can see where the funds of the government are being used in, say, development of the cities, where there would be probably more transparency within the citizens and the government, where we know that the funds are being used in the right areas and for the right development, right? Political funds as well. The inflow and outflow of funds would help the citizens of a country be able to vote for the right sort of party. These sort of use cases help with the underlying technology, which is blockchain, where we have transparency and we can actually see this on the ledger, right? That apart, there are the usual use cases like lending platforms, credit scores that we can probably have, which could be universal, interoperable, and be used across the globe rather than just region specific. And I think one of the most important things, and I've faced this problem, and I think most of us have faced this, is cross-border payments. So when I go to a different country, I'm paying incredible exchange rates and transaction rates, which could be subsidized to a certain extent with the use of blockchain. But that apart, I think Pranav and Tarusha have already mentioned about metaverses, NFTs, so I'm not going to repeat that again.
So zooming in a bit, Adrian, into the main theme of the panel, which is the financial service industry and the potential blockchain technology presents. So we have seen, banks being at the forefront of adoption and experimenting with what this can potentially do. There is Axis Bank working with Ripple, then ICICI and Yes Bank have joined hand with a project launched by JP Morgan. So what specifically do you think that this technology can do in the traditional financial services industry? And if you can contextualize it in the sense that, especially in India, what opportunity can it present?
Sure. Thank you for the question, and thank you for inviting me to this panel. It truly is a pleasure to be here joining you from Vancouver, Canada. Of course, I will try to give you some Indian context. I have spent many years in India, and it's a country I'm very familiar with too. So yeah, so I think I'll answer this question expanding a little on what Kavya touched on too, right? So blockchain, one of the early use cases for it was payments, right? And whether it was cross-border or just inside a country for that matter. And I think that's an area where we've seen remarkable traction, right? So like if you just look at stable coins, which was an innovation which just took place over the last few years. So there's a stable coin called USDC, for example, which grew from about $1 billion 2 years ago to $45 billion today, right? So that's like incredible growth there. And that's a stable coin that I use personally to pay our overseas team, right? So that's a cross-border payment use case that like I actually use inside our organization, right? So and I think we'll see that more and more as banks adopt blockchains for things like interbank settlements, like so that's it's slightly different form of payment. It's doing it at a mass scale, right, between the banks, right, when they're settling things whether it's on short-term credit markets or foreign currency exchange or whatever. Banks have to constantly settle these, and like the traditional rails for these, like it can be done in a few hours, but sometimes in cross-border situation, it can even take a few days for settlement of these transactions to take place. But on a digital ledger, it can actually take place in a matter of seconds, right? So I think that's a great speed in finance is always it frees up capital for more things, which is always good. So I think I hope that answers the question.
Yeah, no, you made some great points. Would others also like to share how specifically in the financial service industry in India we could see blockchain being adopted more and more in the future?
So Apurva, if I can, let's just step in. So my own background is, let's say, about 10, 12 years in financial services in India.
Right.
I've been across the spectrum. I've been in asset management side, broking and distribution, insurance side, and also structured finance. So my experience if you look at it from a 30,000 feet view in financial services, my experience has been that horizontally it's broken. So what I mean by that is that, at least for example, I don't see the necessity of, let's say, cross-sell department, right? Or some strategic function, whatever name you can call it, which basically synergizes between different businesses or different verticals. And wherever there are no regulatory boundaries, those you can say those collaborative efforts should be very normal, because there are ways and means, and they basically benefit the stakeholders, the shareholders, and of course the customers, etc. So there's a horizontal, you can say, transparency and trustless network which can be built using blockchain as a technology fundamentally.
Right.
B is, if you look at it vertically, then most of the board meetings and conversations I was part of, and I'm not making a comment on any specific institution here, please understand, this is a nature of any centralized organization, is that when you have multiple hierarchies, customer is not in sight typically. So rarely, I think Amazon or one of those companies used to have, let's say, one seat in a boardroom reserved for the customer. It used to be always empty, etc. But I would say both in terms of reality and mindset, usually the customer centricity is missing. So how do you sort of disintermediate? And the power of this technology, it also disintermediates in a way that you create that direct touch with the customer or with the participant. If it's a B2B play, it is with the participant who is going to be interfacing with the customer. If it is a B2C play, then you are interfacing with the customer. So financial services, as the name says, it is about service. Yeah. Whom are you serving? So essentially you're serving customers, right? So I think this vertical disruption wherein the customer becomes the single point as a single node around which the entire business is centered around is the future. And it can't be done by actually building hierarchies of organization. It can only be done by building an amalgamation of various technology, wherein something like a blockchain, which is like a decentralized ledger, wherein you can build these trustless, fungible, and extremely transparent systems, being the bedrock around which you can have other technologies like AI, ML, layered up, so that you can build that customer direct connect, engagement, etc. Right. So this is at 30,000 feet. Now, if you look at it from a 5,000 feet perspective, that means the whole lending as a space becomes a lot more customer centric, right? So can, let's say, the real world assets, as well as you can say the social imprints of users be utilized without compromising on their data and their personal privacy? And can the right kind of credit decisions be taken? So this is like from a lending perspective, just as a case in point. Can wholesale lending, credit scoring be shared across various institutions? So this is from a B2B perspective. If you look at insurance, can the insurance become a lot more individual centric? Can you create systems in which the individuals who are just data points in case of insurance industry become more participative in terms of creating the products of tomorrow, even if they work in a smaller group of customers, but still from a premium perspective, the premium is priced in a way that the customers pay for the insurance that they seek, rather than getting a product that is being manufactured centrally to cater to a very broad audience, and it does not serve anyone broadly. If you look at structured finance, can you build products which are once again available literally on the go? Extremely flexible technology, right? So here you can, let's say, build products which are serving for a specific needs, specific market conditions, and we already see certain platforms emerging around this. Like for example, let's say if you, I'm just saying example, let's say if you have a Mudrex, right, or Stock Grow, they offer by giving more modular and you can say customized product vis-a-vis traditional broking businesses, which are essentially pass on the risk directly to the consumer, systemically, if I put it this way. So I think if let's say we go on looking at this from a first principles perspective, both horizontally and vertically, we'll see a plethora of applications. So I'll just sort of go with Adrian, and what even Kavya mentioned there is that the whole financial services system, and for the purpose it exists to basically serve the customer, can potentially be disrupted by these bundle of technologies over a span of time.
Right. To sort of replace, but make what's there better and more customer-centric and transparent. Tarusha or Kavya, would you like to share your thoughts on this?
So I jump in here, but I think, Prav made a very great point that the technology that we're dealing with in terms of blockchain can really make or disrupt this financial sector and make it more customer centric. So that can be, because it becomes customer centric, the kind of use cases that it would have, not just in vis-a-vis lending or vis-a-vis keeping, say, like a CBDC, they all change. And obviously with blockchain, the kind of transparency that comes in and the kind of security that comes in, we hear of how, just to take an example, like how Aadhaar, those identities, they keep getting leaked, and there are databases available. Like all of those details are available online for a few bucks. We've seen something similar happen in China as well recently. So, that is where the disruption is coming in, that we are decentralizing, information in such a way that it cannot really be hacked, that, that one point of failure that gets removed. So that obviously has massive implications even in the financial space. Even if we are looking at identity, we are looking at CBDC, whatever we might be looking at, there are so many use cases that require change in this space. And, what Pranav said kind of earlier, that this is all about making the existing system better. So, when I said that, okay, DeFi is going to give people who are, as a prerequisite, they are being rejected from the traditional financial system. That obviously that is also about giving the user an opportunity to at least be a part of some sort of a financial system, which is kind of as a prerequisite rejecting that particular user. So it is about creating those opportunities for users to make it more user-centric, where, be it something as simple as perhaps storing or saving your hard-earned money somewhere, whether it is lending, borrowing, insurance protocols, ID related things, whether it is keeping like a civil score or like a social score or a social security detail. All of these things come down to the user, and blockchain, the main way that it will disrupt are basically, the way I see it, there are two. A, it's decentralized. B, we are kind of ensuring that there is some amount of transparency and security that comes in with this added layer.
Right. And I think we are still a bit far away from these applications and use cases being adopted at, massive scale or being too mainstream. I just want to bring in this important point of regulation. So a lot of countries around the world are deliberating and figuring out how to regulate blockchain technologies and the various use cases it's presenting. What are your thoughts on the regulatory and the operating environment that the industry currently needs to really flourish? If Kavya, if you would like to start.
Sure. In terms of blockchain technology itself, right? The governments I've seen so far, including the government of India, has been very pro the technology, right? The concern in terms of regulation always comes down to when cryptocurrencies are involved, and especially when cryptocurrencies meet the real world currency, which is fiat currency. So that is where the regulatory uncertainties kind of come into the picture. But to answer your question, right, when it comes to blockchain technology, I don't think there are any regulations that the government is looking out for, other than policy making, setting up sandboxes, and actually figuring out the use case of blockchain technology in any sort of problem statement that they have. Right, there's supply chain solutions where blockchain technology is being used for transparency, to see how certain product reaches from A to B, from the source to the end result or end area, right? So basically, when it comes down to blockchain technology, I think there are no regulations that we are looking at this point in time. It's mostly about adding more blockchain technology initiatives, like running accelerator programs, maybe doing more hackathons that would get more people building with this technology, and running government-aided sandboxes to look at, having more interesting, innovative solutions using this underlying tech. But when it comes to cryptocurrencies, that's where the regulations are kind of coming into the picture. And I think the Indian government is sort of going in the right direction in terms of regulating cryptocurrencies. And if there is regulation, that means, there is a future for this. And there are some, conversations within the government that are happening about, probably getting this going in the right direction in terms of taxation, in terms of companies sort of launching their own tokens, etc. But the technology itself, I think, is a free for all, and it's community driven, and anyone can essentially use it for the betterment of the world itself.
Well, that's true, absolutely. But there's still hesitation, I guess, amongst the entrepreneurs to, like a large number of entrepreneurs to come in and build in the space because of, whatever reasons. If Tarusha or Pranav, if you guys would like to share your thoughts on the regulatory and the operating environment that would really bring a lot of, amazing entrepreneurs in the space and fuel this economy further.
Sure. So, I can step in here. Like my perspective on the entire policy, table tennis game that keeps going on is that it is just that. It is very iterative. Policy is always going to be iterative. The process is going to be a little painful for the stakeholders because, you have to keep making representations, keep making the government understand, that it is not just a Ponzi scheme. It is, to keep out the bad elements. Like, see, I understand the government's point of view that, they are trying to regulate for the masses, right? We as a industry get into our own echo chambers and we feel that, okay, we are building and everybody understands. But the truth is that, a fraction of that mass population understands what's happening in Web3. So the government has to, create policy for everybody. Having said that, and this is not a very popular opinion, I do not believe that the government should coddle the, end user, because ultimately Web3 is all about decentralizing and giving more onus to the user, like end user to have more responsibility, to feel, to do what they want with their money, or, and be a little more responsible. So that, having said that, I think there is a fine balance that needs to be tread here, and policy would be iterative. And as I mentioned earlier, it will be a painful process while it is taking shape. But, to your other question, that how do you kind of encourage other entrepreneurs to build in this space? Very honestly, I think, entrepreneurs are going to build. They'll find another jurisdiction to go to, and they will build. So what, bad policy or, this iterative process basically does is that, it drives out people to other jurisdictions where they feel they'll be more comfortable building. I don't think that something like, policy really stops entrepreneurs. Like true-blooded entrepreneurs, they'll build, right? Because they're interested in building. They're not, that is like something that doesn't even strike them, I think, like the compliance issue. Now that, with Web3, it's like, it's a mainstream conversation. But otherwise, like, if you talk to folks who are in the deep tech space, and they're building, they are not thinking compliance. They're just thinking about their own product. That compliance actually, comes in when they go in and try to raise money, right? And then, somebody more experienced than them will tell them that, what you're doing requires some kind of regulatory approval. So that is like step 2. So, I really think that builders just find, shores where they will find it more conducive to build. I would really like India to get on this bandwagon and not be left behind like we did with, with microchips and with the internet itself, that we became like a back office. I really don't think that, I don't think that we should do that kind of disservice to the kind of really great minds that we have here, Indian entrepreneurs that are building for the world. But builders are going to build.
Adrian, if you can give us a perspective outside of India, what kind of regulatory and operating environment is sort of necessary for this economy to go to the next level?
Yeah, so I think I'm more Tarusha's side here in that, like, I think there needs to be balance here between, regulation and, protecting the end user, the retail user, the consumer, but also allowing scope for innovation, and also just, maintaining this foundational principle, behind blockchain and cryptocurrencies, called decentralization, right? And a lot of that was about like taking back control from governments or people, who had a lot of power, right, to potentially control our lives in different ways. So, that's kind of how all this movement started, many years ago, through this cypherpunk. So that punk. So there's still a tension there, but certainly, like in Canada, like I was a founder of a regulated security token platform. So I think, as Kavya said, like one approach to regulation is a sandbox environment, which is very helpful. So where the government can provide some guardrails, but also can give scope to entrepreneurs and organizations to innovate with some light regulation, let's say, right, or some leeway on certain exemptions on certain things, right? So that was very helpful in Canada. The regulators there, which are provincial, they take that approach when it comes to blockchain generally. So I think that that could be a very successful in India too. Also, I just like to provide a bit more perspective again. Like, so, I think we're potentially in a cycle of erring on the side of over-regulation. Regulation always lags behind, and part of it is driven by news cycles too. So, there's been a lot of attention on crypto, but in the scheme of things, it's still a relatively small sector, right? So, global equity markets maybe $100 trillion, right? Global market cap for all cryptocurrencies is $1 trillion, like 1% of that, right? So, like, so does it really need to be heavily regulated? Arguably not yet, right? It's still not at that scale. We have not got to the scale of mass adoption. What is adoption of cryptocurrency across the world? Has it even crossed 15%? If it hasn't, it's not crossed the chasm, right? So we're not, I don't think we're quite at that ready, at that stage of like the need for the regulator to get too involved. Anyway, that's my perspective.
Thank you. Pranav, what do you think? You work with entrepreneurs very closely.
So Apurva, so I'm just sort of in a way summarizing what
Sure.
what's been shared earlier, is that there are three things that worry regulators. One is money laundering, but these are very fungible technologies. Second is taxation. Essentially, if somebody is sort of I would say, in my opinion, this is just my opinion, is that somebody who is a citizen of a country and enjoys the public good should be paying taxes. So if there are tax leakages, it's definitely worrisome. Third is systemic risk that Adrian spoke in detail about. That how something like this, which is so fungible, can actually have a certain overrun on your fund base currency or the legal tender which is there in the country, or could actually some sort of cause a capital account convertibility issue, especially for the currencies like Indian currency, for example, which is sort of there's a capital account convertibility and we sort of manage certain balances of dollars, etc. and so forth. Now the thing is money laundering. Definitely, we are getting to a point wherein FATF guidelines have put things into perspective, and this is a non-negotiable. Whether you're a protocol, a decentralized protocol, or whether you are a centralized entity, FATF guidelines are pervasive. I think we have crossed that bridge, so that's not a concern anymore. If there are concerns, the law of the land actually steps in and definitely sort of takes care of it. The second part is taxation. Even in India, also the recent taxation framework came in. There may be opinions about whether it is draconian, whether it is liberal, etc., whatever it is. But the point is, there is a taxation framework. It is great to have a taxation framework. That means that from here it can only become better and more inclusive. Third point is systemic risk. Now, systemic risk is a very interesting topic. Some people look at systemic risk as, hey, this is like 100%, let's say $100 or let's say 100 rupees is the total economy. This is, let's say 1%, 2%. But that is not the point. The point is how many people are participating and do they understand the risk? And if they understand the risk, if something goes south, then who's going to be protecting their interest? where should they be knocking their doors? So this is where a regulatory framework is very important to ensure that the right kind of legal and ombudsman kind of an oversight is available. And my general shout out to the builders, here would be that self-governance is extremely important. Any industry which is matured, whether it is broking industry, mutual fund industry, telecom industry, etc., everything started with self-regulation. So as in, let's say if you are building a protocol, how you can focus a lot more on checks and balances in your own system, have the right kind of treasury management. For example, Adrian does a great job at let's say Covalent, right? But the thing is that how many protocols have a CFO who is capable enough to understand what is treasury management, what is the risk we should be taking, what is overrun on, what potential scenarios can cause an overrun? How do you ensure that cross-border payments happen with absolute checks and balances from understanding the local taxation, the regulatory aspects of it, right? And this kind of self-governance and maturity will eventually take this space forward. So as this market correction has happened, fundamentally the technology stands strong. But what will get fixed is the governance and this whole oversight that happened on the legal frameworks, on understanding the financial health of a company, of a protocol, of the ecosystem, etc. So as a lot of prudence comes in, when we emerge out of this bear market, we'll emerge very strong. So all I can say from a builder's perspective is that, as Tarusha was mentioning, that builders will keep building. So find those innovative pathways that you keep on building, and just, don't let your shoulders droop right now. It may be building in India, outside, whatever it is. In any case, these are global plays. So, that, doesn't really matter in the interim. And I'm sure, all of us, we love India in any case. So, so the point is that eventually the good part of all of this, the public good that will be created out of these protocols and the employment, etc., will come back to the country.
Kind of just double clicking on what you said and the conversation around risks this entire industry presents. It's very hard to ignore what's going on right now in the market with multiple crypto lenders failing one after another. Also, there have been several reports that sort of encapsulate the scams that have happened in the DeFi space. So if all of you can sort of share, one side we're talking about how it's too early to regulate, but what can be done that this is scaled, like DeFi is scaled, can be scaled for mass adoption without compromising on security.
So Apurva, if I may just add to this very quickly, is that we must regulate. Regulations must come. Because right now this has become an echo chamber. I don't know, maybe Kavya mentioned about this, or but the thing is, if we land up becoming an echo chamber, that means we're only catering to 2 to 3% of the total population. Maybe let's say somebody is mentioning there are like 200 million odd participants, wallets, etc. We are 7 billion of us, globally. So how do we broad base this? Broad basing means that you require regulation as in a conducive regulatory environment. And as Adrian was mentioning, not a restrictive, or as Tarusha was mentioning, not a restrictive regulatory environment. Now, the challenge here is that how do you create a conducive, progressive regulatory environment? And as you're mentioning, the data points right now are what happened with 3AC, Celsius, Terra, etc. And definitely creates a situation wherein, let's say, it sort of puts regulators on a backseat and they observe whether this is creating a systemic risk. If this is left, completely open, then can it create challenges? So I just want to share here that, a few things which regulators can probably set up, I would say step up and notice here is that a lot of these entities that failed were centralized entities. These kind of entities have failed in 2008, in 1997, in Great Depression, etc., etc. There are enough and more data points there. So just focus on that centralization is the problem. Point number one. Point number two, the thing is we can't dismiss globalization. We are an interconnected world. So if let's say something happens in auto loan segment in US, and let's say there is a crisis that happens in the central banking system, which is by the way happening in US right now, just to share a perspective there, it will have a contagion effect in all the banking system globally. Right. So you can't isolate, something. So what has happened right now in blockchain space is a contagion. And it is important to observe this and see that centralized entities are a point of failure, and see that how you can promote a lot more decentralization, create superior governance, encourage builders to build superior solutions which can sort of interface with users and give them the right kind of, you can say, disclosure, so that they can participate very meaningfully and scale these systems and be a global citizen of these emerging networks.
No, I understand your point, but I guess centralized entities bring mass adoption. And, there's this whole Web 2.5 thesis going around in the VC world, which is simplifying and making the UI UX more, like we're used to. So, I mean, in that context, what can the centralized or decentralized entities do to scale but not compromise on security? If others would also like to share their points. Kavya, Adrian.
Sure. So one main thing with DeFi protocols, I would say in particular, is a lack of transparency that I'm seeing. And I'm a DeFi user as well, and a lot of things aren't being said when they're supposed to be told, right? And that is something that I think comes because of centralization that Pranav just mentioned, where the organization decides not to share certain vulnerabilities that it might have in terms of security. So some things that they could probably look at is, DeFi monitoring tools where we could actually be able to assess certain things before actually making a financial decision to invest in something, right? Putting out security transparency where developers can basically build and help actually close out those vulnerabilities could be a way of actually making DeFi protocols more safer and more secure, right? If people know what the vulnerabilities are, they probably wouldn't invest at that point in time. And when we know that the problems have been sorted out is when we would start, using that protocol. Another thing is DeFi insurance. A lot of companies are doing it so far, but I think it can be a little more robust than what it is currently. So in terms of, how we could go in that direction would be, just being more transparent. And I think the organizations need to be more open about the lack of what they have and what they don't. And this is something I would say every company should be doing in the blockchain space, especially with blockchain technology being all about transparency and for the community, right? So that would be the main thing that I would try to resolve here.
Yeah, some great points, Kavya. Tarusha, Adrian, would you guys like to share?
So, I would just like to add to what Kavya and Pranav already kind of said, that self-governance is very important, considering, there is a lack of clarity vis-a-vis any concrete policy. So, self-governance becomes key to scale. The other thing that, there needs to be, there are a lot of, I think, centralized apps that are masquerading as, dApps right now, at least, and that needs to change. Obviously, the thing is that, to give credit where credit is due, I don't think decentralization can happen overnight. It's a process. Like, you start and you move towards making your app decentralized. It cannot be decentralized from day one, right? So that is fact as well. But ultimately, it is the onus of the platforms and the entrepreneurs to be as transparent as possible, try to build in public, because you are really working with cogs of a wheel that are being utilized and can have really long lasting impact. And the ripple effects, like if you're dealing with any kind of it's a financial market, to think that okay, if any sort of a failure is happening there, then the ripple effects are seen in multiple ways. As Pranav mentioned, that right now what is happening, it's a contagion, and we need to sort of observe and see what all does it take down. But again, I think that, what is important is self-regulation. I think that, entrepreneurs need to be very transparent with what they are doing, even though that can also be a little tricky, because, we are, as a society, we kind of frown upon any kind of failure, and, entrepreneurs take it very personally when they fail. So they don't want to share that in public. But I think that, a lot more stakeholders talking about this, giving them encouragement that it is okay that, you are failing, or if you are just doing right by your end user, I think then all is well. And I think a lot of entrepreneurs do take that seriously, and they continue to scale. Ultimately, I think another additional thing would be perhaps the security audits that that get done. So that is something that users can be more aware about as well, perhaps, and platforms should be more concerned with getting making sure that their smart contracts are audited, and not just audited once, but audited regularly, to to, ensure that they are staying ahead of the curve. Because see, nothing is unhackable. That is already a given. But making sure that you have these additional security layers and you're getting like experts come in and try to get inside your system, I think that is very, very important. I think with Web2 also, companies always did like all of these hackathons and bug bounty hackathons. That the idea was just to allow all of these hackers to get into like the system to see and catch vulnerabilities. And I think that is like a practice that we in the Web3 space we should sort of adopt as well. It might be expensive in the short term, but the longer term implications I think are greater if we don't do it.
Got it. Adrian, are you seeing people, entrepreneurs, self-regulate after whatever has happened? Is there a more conscious effort to do that now?
I think so. Like I think we see more entrepreneurs being more vocal on social media about Ponzi schemes or things that are perceived to be more scammy. And I think that's good. I mean, that's a way of self-regulation too, at least in DeFi, for example. So I think related to self-regulation is more sharing of best practices, and that's also similar to sharing from learnings from failures, right? But then when it comes to operational hygiene, OPSEC or InfoSec, I think there's a lot of best practices, and a lot of it is like borrowed from Web 2, just like it's not necessarily something special to the Web 3 world, right? Like when there's big money losses that we hear about, if it's not a scam, or a technology failure, it's usually like related to human engineering, right? Or phishing, right? These are like techniques which are well known, right? It's like private keys are compromised potentially, right? But how did they get the private key? It's like, it's human engineering, right? So we still need to, maintain those good practices from previously and share, more and more amongst each other how we apply these to our world.
So just moving on to something that the industry is closely watching is the launch of CBDC by the RBI. What do you think, like what impact will it have on both the traditional banks as well as the crypto sector? Pranav, if you'd like to start.
So definitely it will bring about a lot of efficiency and transparency. And these are two bedrocks of a great democracy. So I'm extremely bullish on something like this. Just to put things into perspective, let's say if you go through mints, typically what happens is that I'm just saying 8 to 10% of the total money transmission, actually is a leakage. I won't call it leakage, but it is basically something that is the inefficiency that gets built in the system. They're like notes, which are like have to be transported, and they're soiled notes which have to be returned, etc., etc. I'm just putting it out, right? And then argument could be that, hey, in any case, we consume digital rupee in any case, right? In terms of credit cards and bank accounts, etc., right? But the point is that the other aspect of it is that the traceability is something which is not there. So how do you improve the effectiveness of your policy transmission? Now, there is a certain lag to it. Now, let's say if you are a country wherein 70 to 80% of the people are dependent upon, let's say, vagaries of nature, let's say agriculture, and there is a very fragile SME sector, for example, and then a large number of industrial houses are dependent upon credit facility for the wafer thin margins that they enjoy because we may not be globally competitive, from an import-export perspective. Then how do you ensure that whatever that, subsidies or financial advantage that you're giving to a specific targeted group of audience, it reaches the audience, it is utilized efficiently, and B, if you want to like roll it back, then you can do this literally at will. So CBDC in that context will make the system a lot more agile, a lot more transparent, and a lot more efficient. So I'm extremely bullish on this.
Got it. Tarusha, what do you think will be the implications of introduction of CBDC to the crypto market or even the traditional banks?
I think Pranav kind of already covered it, that it'll bring in transparency, it'll bring in efficiency. So obviously very bullish towards that. The fact that, again, the main issue or grouse we have with the system is that it is very opaque, and stuff happens without everybody being kept in the loop. So I think with CBDCs, that kind of goes away, and that is like the biggest advantage. But having said that, I think for the crypto space, I really don't know how does it, how would it really impact? Because see, when we are talking about crypto, we're talking about decentralization. And when you're talking about something like a CBDC, which is going to be centralized in nature, so that is it, that pretty much is at very much at odds with what crypto or decentralization or Web3 stands for. So again, it might be easier for the traditional financial system to interact with the Web3 space if that is allowed, with the adoption of CBDCs. But other than that, I'm not entirely sure how would it really have an impact on the very essence of Web3, because this is very, very at odds at what Web3 or decentralization kind of stands for. Because here again, the government would be, controlling the CBDCs. So that having said that, I think it might just help and, help in increasing adoption if CBDCs are allowed to interact with the Web3 space, and the on-fiat ramp sort of that process kind of improves. That would be one great implication, I think. And have with that, I do think that more liquidity would move into Web3 if that interaction is allowed. But again, it's too early to say whether that interaction will be allowed at all, or whether the government would not really allow that interaction. And if that interaction is not allowed, then again, these are just two parallel systems that are running, which are very at odds with each other. That there is a lot of power that the government is exercising on one end, and the other end, there are platforms that are being built that are essentially moving towards being completely decentralized.
Right. Kavya, Adrian, do you have any thoughts on this? If you're seeing a successful application or introduction of CBDC outside of India, and how it's shaped the economy?
So I'm pretty much with Tarsha in terms of like retail users, right? I don't see how CBDCs would affect any sort of cryptocurrency user as of now. But I do see the launch of CBDCs actually adding to more mass adoption, right? People like my parents would be open to actually using digital currencies because it's backed by the government, and there are people who follow rules and regulations. I see companies like Cred and Google Pay actually implementing the CBDC. Instead of having given out cred scores, they could essentially give out the digital currency to actually use for users. So this would mean that they don't actually take vouchers, but rather have money that they can use for any sort of payment that they can make. So I do see that there'd be mass adoption for CBDCs if they are launched in India, which means that this is one step towards mass adoption of cryptocurrencies itself for everyone in the world, right? Because then people start understanding how decentralized currency works in general. That apart, for banks, I think, and the users of banks, I think this adds a layer of transparency where we know where the money is being used, the money is being lent, and everything is essentially stored on the blockchain. And this becomes easier in terms of traditional banking systems as well. Everything from getting a loan would be easier than actually having to go through the tedious process that we have currently in the banking system that we have. So overall, very bullish on CBDCs, and I think it's one step closer to mass adoption of the entire decentralized tech.
Adrian, any final thoughts on this before we move on to the final question?
Yeah, a couple of thoughts. So I think the Canadian central bank, looked at this a number of times over the past 5 years. Let's say, I think the first study I saw maybe from the 2017 era, but their conclusion, in short, was that it's maybe too premature to launch a digital Canadian dollar. That doesn't mean that there aren't, but those have been launched by private sector, not by the Canadian bank. So I think that is really my view too, that I think we might see some experiments by central banks around this, but I think it's maybe like 3 to 5 years away. But when you think about crypto mass adoption, it may be 3 to 5 years away. So so I think that's okay.
Right. So, we started the conversation with exploring scalable use cases of blockchain technology. Now, if we can, end it with if you guys can talk about the kind of projects you're working on or investing in that you're particularly excited about that sort of further enhance the blockchain ecosystem in India or outside. Pranav, if you want to go first, and then others can follow.
So there are two broad areas, I would say. That one is infrastructure. So infrastructure would be your financial infrastructure, especially. I would say payment gateways, custodies, etc. These are very interesting. By the way, I just want to make a point here is that one of the things that my sense is government would definitely benefit from in terms of regulation would be to giving us space for custody solutions. Let's say custody companies to establish themselves as a local entities so that the assets are in local mainland, and that will give them a lot of comfort that, you know, at least various tracking and tracing activities can be done for the assets. Okay, so one is infrastructure. So infrastructure has very broad context in terms of finance, which is payment gateways, etc., custody and exchanges, which I mentioned earlier. The second is, let's say, gaming infrastructure, metaverse infrastructure. These are very interesting amorphous spaces right now, which are becoming a lot more concretized. And gaming, India is the fastest growing gaming market in the world right now. So in that sense, you know, whatever will happen now, play to earn may be going through its own stress. But the thing is, it also projected a very interesting model, which can create a balance between gameplay as well as monetization and transfer of assets which are in game, whether it is Roblox or, you know, whatever, you know, different games. And that is something of, you know, tremendous interest. So how can we invest in infrastructure like this? And the third would be infrastructure, which is, let's say, in terms of even core technology, blockchain space itself. This is a brilliant time where, let's say, all the noise has settled down and price is not the most interesting feature right now. So the most interesting feature is that what builders are doing right now in terms of building some interesting technology pieces, which are eventually going to channelize both data and value over a span of time. So this is all the infrastructure. The second part is middleware. Now, if you look at the entire technology stack, you know, you have blockchains, layer ones, layer twos, a lot of hype and a lot of, you know, money being there, etc. But over a span of time, our thesis is that this will become a monolith as a multi-chain world emerges. The most exciting space is the middleware. So for example, it's a Covalent, like Adrian, you know, who's representing Covalent here, is a very interesting middleware, you know, component. And they have indexed, you know, innumerable number. I think I was talking to Ganesh, you know, recently, he was mentioning that I think 50 odd blockchains they have indexed. What indexing means is that they have the data sets of 51 blockchains, the real-time data sets, so that interesting applications can be built to analyze, to project this data, to sort of take decisions, etc. So that creates a very interesting, you know, this is agnostic to any blockchain. Similarly, there could be data oracles, you know, like a company like Pan Protocol, etc. And then there could be those which are decentralizing and spinning up nodes. So these are, think of them as like the cog in the wheels, which are very important for taking the fundamental base layer blockchain as a technology and making it more closer to the application layer, where the consumer tech and especially the fintech applications around blockchain will actually scale and prosper. So we are right now very bullish on infrastructure layer and the middleware, which is getting a lot more concretized right now.
Kavya, any projects that you would like to talk about that you're investing in or partnering with to further the application of blockchain?
For sure. So my organization essentially helps in getting more developers into the ecosystem. Blockchain, as it is an engineering movement, there aren't enough engineers in this, you know, in this technology for the betterment of the technology itself, right? Which is why, you know, as Pranav mentioned, infrastructure projects are very interesting to him. But who is building those infrastructure projects? It is engineers. But what we look at predominantly is partnering with, you know, education platforms that essentially help more engineers understand this technology and start building in this technology, right? So what I'm very bullish on right now, because we are so nascent, is ecosystem enablers. So essentially companies that are helping help connecting the blocks, the missing blocks of the ecosystem that's already built out so far. So far, we have quite a few infrastructure projects, middleware projects, and decentralized applications are immense right now. But I think that we are still pretty nascent in terms of the technology itself. There are, as you mentioned, security vulnerabilities. So how do we get those gaps fixed in the next coming years before we actually go into a place where, you know, this technology is in its scaling phase, right? Not in its growth phase. So for me right now, what I'm bullish on is mostly projects that are getting developers interested in this technology, getting new infrastructure projects built, and any sort of middleware project that exists in terms of dev tools, DAO tooling, metaverse tooling, that sort of stuff, right? So those are the kind of projects that I'm pretty excited about as of now.
Awesome. Tarusha, any projects that you...
Kavya and Pranav kind of stole my answer. So I was about to say infrastructure play and ecosystem enablers. So essentially, yes, my bet would be on them as well. Essentially, you know, these are the guys who are building right now, and you know, their results will show once this kind of correction contagion is over. So yes, my bet would also be on ecosystem enablers, people who are helping, you know, putting those blocks together, helping people move from Web 2 to Web 3, you know, lending a helping hand there, as well as the infrastructure play, because these are you know, these are kind of plays that you have a moat around, like, you know, where with these platforms there is a moat inbuilt, and I would bet on that moat to sustain them through this particular cycle and then the next.
Right. Adrian, if you'd like to share any interesting projects that...
Yeah, sure. I mean, not project specifically, but similar to Pranav, Kavya, and Tarusha, you know, I think there's massive potential around infrastructure, you know, data infrastructure specifically. You know, I think it's very important when we look at mass adoption, we want to bring along as many people as we can where they already have developed and mature knowledge and skill sets, right? So like we say, there's how many JavaScript developers are in the world? You know, how do we make blockchain look like an API which they can manipulate with JavaScript, right? Like, for example, how many people can use an Excel spreadsheet? How do we make blockchain look like an Excel spreadsheet? How many people can, you know, are familiar with data warehouses, you know, or maybe something more advanced, but how do we make blockchain look like that? Right, so those are the type of data middleware solutions, for example, which I think are very, very powerful to bring along, you know, all the people, you know, the millions of people who have those skill sets and that training in the past. And so then specifically, I think there's, this is related to what Pranav said, like around games and adoption of blockchain by games. So games, actually, they require very performant blockchains. So, you know, so now there's a trend to like single purpose blockchains, right? So these are spun up by either like Avalanche or Polygon or, you know, other L1s, but, and they're called subnets or super chains or app chains, have different terminology, but there's like single purpose, single ecosystem blockchains. I think there's like very large potential there because it captures all the long tail of like use cases around games and things like that. And so we want to, you know, provide indexing services and make the data of all this long tail also available to the world.
So that's a wrap for ET Future of Money 2022. I would like to thank once again our stellar panelists, Kavya Prasad, Tarusha Mittal, Pranav Sharma, and Adrian John Class for joining us and sharing their insightful thoughts on everything blockchain and the way ahead. Thank you so much.
Hello and welcome. I'm Aloni Bhatt. Welcome to ET Future of Money Summit. Now, there have been tremendous changes in the way we transact using, payment system. A couple of years ago, it was unimaginable that you could pay your local roadside vendor for your vegetables through a phone, but it's now normal. And there have been tremendous transformations in the payment system. Other tech innovations like cryptocurrencies, stable coins, etc. And right at the center of this rapid, mind-boggling churn are central banks, juggling potential risks and benefits of all of these technologies. Now, to take advantage of blockchain technology without losing control of the money supply in their economies, to ramp up financial inclusion, for instance, many countries are looking to launch a central bank digital currency, or CBDC, as is India. India's finance minister has said that the digital rupee will launch sometime this financial year. A wave of CBDCs is coming. What are the lessons for India? Now, to give us some insight, I have with me economist Ishwar Prasad, Tolani, Senior Professor of International Trade Policy at Cornell University. He's authored several books, and the latest being The Future of Money, How the Digital Revolution is Transforming Currencies and Finance. Professor Prasad, welcome, and thank you for your time today.
Thanks. Thank you for having me on, Melanie.
All right, sir. To get started, around 100 countries are exploring CBDCs at some level or other. What are the benefits of a digital currency over a physical currency, and why are countries around the world looking to make this transition?
So as you correctly pointed out, Melanie, in many countries around the world, the digital transformation is already pushing people away from the use of physical currency towards digital forms of payment, largely provided by the private sector. So this creates a bit of a quandary for central banks that want to keep their money relevant at the retail level. If they don't switch currency to digital forms, perhaps the currency that they issue will not be used for retail transactions anymore. But there is a broader set of issues beyond just the viability of central bank currency at the retail level that is coming into play. As you alluded to in your introductory remarks, some countries seem to view introduction of a CBDC as a pathway to financial inclusion, giving everybody in the economy, small businesses, consumers, easy access to a low-cost digital payment system. The Bahamas, which has issued the world's first nationwide CBDC, the sand dollar, has this motivation, for instance. In other countries like Sweden, where the private sector is doing a perfectly good job of providing digital payments to everybody, the Riksbank, which is a Swedish central bank, seems to view CBDC as a backstop to a private payments infrastructure. In other words, the private payments infrastructure might be functioning perfectly well in normal times, but it's subject to confidence vulnerabilities, technological vulnerabilities. So CBDC becomes a public payment option that is a backstop. Then there is China. In China, there are two payment giants that have dominated the payment space, but the central bank is concerned that while everybody in China might have easy access to low-cost digital payments, the reality is that these two payment giants are blocking competition. They were not until recently willing to share data with the government. So these are the motivations at play. Now, certainly having a CBDC rather than physical currency will pull a lot of economic activity out of the shadows because it's harder to conceal transactions that you don't use physical currency for. It makes it less likely that central bank money can be used for illicit transactions. So there are a variety of benefits in addition, of course, to giving everybody in the economy, as I mentioned, including very small businesses, including hawkers on the street, and even consumers who may not have very high income levels, access to digital payments. And that gets away from the problems of handling cash, the vulnerability of cash to loss, theft, etc. So there are many benefits to a CBDC.
Okay. Professor Prasad, you alluded to the digital payments, right? So that space in India is growing. Recently, there was a report that came out from a digital payments company and the Boston Consulting Group. And I think the title of the report was Digital Payments in India, a $10 trillion opportunity. Now, basically what it said was that India's digital payments market is expected to increase threefold from current some $3 trillion to some $10 trillion by 2026. And I think they also said that it would translate to digital digital payments, non-cash. That would make 2 out of 3 payment transactions by 2026. So now there is already this tremendous shift towards digital payments. In this backdrop, does India need CBDC?
That is a very legitimate question. And I think for countries issuing CBDC, this is a fundamental question to be posed, because while I talked about the many benefits of a CBDC, there are also potentially problems. You might end up potentially challenging private sector innovation in terms of payments, because after all, who can compete with a government-funded payment system, even if that is run by the central bank? You might disintermediate the banks, that is, deposits might flow out of banks into central bank digital currency wallets. Plus, of course, if you don't have the option of using physical currency, any vestiges of privacy that we have left in our financial transactions might be lost. So this is an issue that every country needs to approach carefully. And for a country like China, or for that matter, India, there is a legitimate question about why we need a CBDC if the digital payments architecture is working perfectly well. And I think the answer here is that there might be some modest benefits for a CBDC in such countries, because you can think about a CBDC as basically expanding the menu of payment options that are available to consumers and businesses. And in some countries, the CBDC might essentially be viewed as a payment infrastructure provided by the central bank or by the government, and the CBDC essentially being a digital token that is interoperable, that can operate across different platforms. Now, of course, in India, thanks to the UPI, we already have the requirement of interoperability across different payment platforms operating on that sphere. But in many other countries, that is not the case. So certainly in India, we have made so much progress in terms of digital payments that the CBDC itself is not going to be a fundamental game changer, but at the margin, it might have some benefits in terms of the central bank still having an important role in the payment system.
You alluded to the fact that it might impact the innovation in the payments space. Do you see CBDCs from your vantage stifling innovations in the payment space in India?
That is a real risk in any economy. Once the central bank, which is backstopped by government, steps in, it could be very difficult for private players to compete. But again, the design issues become very important here. There are conceptual and technical design features of a CBDC that can substantially mitigate, even if not completely eliminate, some of the risks that I've spoken about. So let's take the example of this architecture that I laid out, where essentially, like the UPI, you end up with an architecture on top of which private payment providers can manage the front-end services. They can manage not only payment innovation using the UPI platform, but in addition, using the digital tokens provided by the Reserve Bank of India. That might actually work somewhat better. So you might have front-end payment services in addition to some of the regulatory requirements, such as know your customer functions, being handled by private payment providers, who could be commercial banks, basic payment providers like Paytm, or perhaps even telecommunication companies. So we might actually end up seeing even more competition if this is well managed. And I think actually India is proving to be an exemplar for the rest of the world in terms of what the role of the government should be. Not in terms of providing front-end payment services, but staying at the back end, ensuring the integrity of the payment system, providing the CBDC as a digital token that can be used by other payment providers, but leaving all the front-end services and the innovation in that space to private payment providers.
So are you saying that, the digital rupee will be able to still disrupt the digital payment space?
In India, I don't think disruption is likely. I think a marginal enhancement is more the vision that the RBI has. And it's worth thinking about how the RBI is approaching this. As the governor of the RBI has made it very clear, what India plans to move forward with is first a wholesale CBDC. This is not the money that consumers or businesses see, but that is used to settle payments across different banks or other financial institutions, or even non-bank financial institutions. So the blockchain technology, it turns out, can be potentially useful there in terms of making those payment mechanisms a little more efficient, which we consumers might not see huge effects on in terms of the front end, although it might make things more efficient, somewhat less expensive, and so on. And then the RBI is going to move forward with the CBDC. But again, in India's case, given how much progress has already been made by the private payment sector, in addition to the UPI, I don't think it's going to be a game changer. Like I said, it's just going to be a marginal enhancement.
Okay. Also, this was something that you pointed out in one of your earlier responses, privacy, which is one of the big concerns. As you said, transacting with cash will provide you with some sort of anonymity. The other thing is, if I'm going to go out to, say, dinner with my family, does the government need to know about it? So how do you see this issue of privacy being tackled? And, what are the broader dangers then with CBDCs?
That's a hugely important question, Meloni, as we move towards a world where payments are going to be entirely digital, because the reality is that anything digital is going to leave a trace. And whether we want to live in a world whereas you said you take your family out to dinner or buy a friend a cup of coffee, either a private payment provider or the central bank, and therefore the government is going to know about it. That's a somewhat dystopian world. And I do worry a great deal about this. Now, certainly there are benefits in terms of making sure that central bank money cannot be used for illicit activities, but there are perfectly legitimate activities that we might not want the government to have an insight into. There are potentially ways of meeting the central bank or government's concerns to make sure that all transactions are auditable and verifiable, with providing at least some degree of transactional privacy. Let me give you an example from China. In China, the central bank digital currency trials are moving forward with 5 grades of digital wallets in which the CBDC can be maintained. The very high grade digital wallets can maintain large balances, can be used for large value transactions. Those have to meet know your customer and other regulatory requirements. But there are low grade wallets where you cannot maintain large balances, that you can use only for low value transactions, where apparently all you need to do is provide your mobile phone number and no further identification. There are technological solutions appearing again, cryptographic tools called zero knowledge proofs, for instance, that will allow people to verify their bona fides in a suitable way to the government or other regulatory agency, and then undertake transactions in a digital form without necessarily revealing their identities. But the reality, Melanie, is that once things are digital, it's going to be possible to unravel these transactions. In addition, digital money creates a whole lot of other possibilities. You can see a government deciding that it doesn't want the money issued by its central bank to be used for activities that it deems illegal, say purchasing ammunition or certain types of drugs or so on. So you can very easily see us moving towards a world where money issued by central bank is used not just as an instrument of economic policy, but perhaps even social policy. Now, this might seem like a relatively dystopian world, but I worry.
Yeah. You spoke of China. So please help me understand this, Professor. In China, then, can you have multiple wallets? One for very high value, with CBDCs, and one for low value, and is anonymity different for each of the wallets, if I understand correctly?
That is correct. Just to be clear, China is in the second phase of its domestic CBDC trial, so it's not widely available yet.
Yeah.
And in fact, the Chinese government is having a very difficult time convincing people to use it, because Alipay and WeChat Pay, the 2 dominant payment providers, have blanketed the economy with low-cost payment systems, whether in rural areas, urban areas, high income, high net worth individuals versus very low income, very low net worth individuals. So the People's Bank of China is having a difficult time convincing the population to use the CBDC. And in fact, they have somewhat ironically argued that that is the government or central bank, would provide more privacy to citizens and businesses who might be using their digital currency compared to the private payment providers who might use that data for commercial purposes. So as you noted, the way the CBDC experiments are being rolled out is with different grades of digital wallets, which in principle provide different degrees of anonymity and different degrees of functionality.
Do you see this kind of replicating itself in India, where the government, the CBDC, may not have many takers and will compete with the private players?
It's going to be very interesting to watch whether there is going to be a huge deal of enthusiasm for a digital version of the rupee or not. Now, unlike China, India is not as far along in terms of its transition towards a purely digital payment-led economy. So there might be some role yet if the RBI moves relatively quickly. But even if the RBI does move forward, there is going to be a question about whether people will just prefer the convenience of private payment systems, which might give them access to other types of products and services rather than using a digital rupee. My sense is that the digital rupee will still have some takers. It will find some value, as I mentioned earlier, in terms of enhancing the overall payment space, but it's by no means going to be dominant in my view.
Okay. The Indian government speaks time and again of its vision and also action to building a cashless digital economy. Do you see a CBDC then competing with the fiat?
So the CBDC would be a version of the fiat currency. So if you think about a fiat currency, it is one issued by the central bank, which is largely, essentially in physical form right now. So certainly a CBDC would have the same characteristics of other forms of central bank money. That is, it would remain a liability of the central bank. It would be provided by the central bank to commercial banks and other sorts of financial institutions that would then go out and distribute it to their customers, who could be businesses or consumers. So all of that would remain the same, except that it would be in digital form rather than in physical form. So the interesting question is whether the use of central bank money will be entirely displaced by the private monies or not. And at one level, especially to a monetary economist, this is quite fascinating because, when money was first created many centuries ago, there used to be competition between government-issued money and private money. The establishment of central banks around the world over the last couple of 100 years basically decisively settled that competition in favor of central banks. And now we are coming to a new era of competition between central bank money and private monies, at least in terms of the medium of exchange function, that is for conducting financial transactions. And as an economist, of course, I believe that competition is a good thing so long as it is kept within guardrails. And I think overall, the government of India and the RBI are doing a good job of creating the guardrails for that competition.
What is the kind of impact you see CBDCs in India having on cryptocurrencies?
Now, of course, this is a period when decentralized cryptocurrencies such as Bitcoin are taking a real beating. And that day, in my view, was going to come because there is no fundamental value that Bitcoin has, because it's proven to be so volatile in value that it's not working very well in the purpose it was intended for, as a medium of exchange. Now, the interesting thing is that there are new cryptocurrencies called stable coins that get their stable value precisely by being backed up by stores of fiat currencies. So for instance, there is the USD coin, which is backed up by reserves of US dollar denominated assets. Even those stable coins have proven to be slightly shaky in value, but at least the objective of stable coins is a lot better. That is, they're not decentralized like the Bitcoin. They're supposed to maintain a stable peg relative to fiat currencies such as the dollar, or perhaps one day the rupee. And then they ostensibly provide more efficient domestic payments as well as international payments. So if you have a CBDC or other digital payments, then there is a question, why do you need any cryptocurrencies at all? If you want better mediums of exchange, why do you even need stable coins? And that is, I think, an interesting question to which we will find the answer in different countries pretty soon. While there is a strong need for digital payments, once you have a central bank providing a low-cost, easily accessible digital payment system, the base case for stable coins is really going to be undercut. One might argue that maybe stable coins will still be relevant in terms of international payments, because cross-border payments are still beset by all sorts of frictions in terms of cost, a very long time to settlement, and so on. And stable coins are creating some efficiencies there. But here too, there are many central banks working on cross-border initiatives to make wholesale CBDC, make international payments work much more smoothly. So I think this crypto winter that we are seeing right now is going to be not just a passing phenomenon, but as a structural feature, in some part due to the response of central banks to the cryptocurrency revolution.
Professor Prasad, do you see CBDCs? So do CBDCs take away from the decentralized nature of blockchain? Are CBDCs handing the power back to and placing all trust in central banks, something which the white paper of Bitcoin spoke against?
That is true, Milena. That's an intriguing question, because the whole point of decentralized currencies such as Bitcoin is to get away from trusted third-party intermediaries such as a central bank or even commercial banks or credit card providers to finalize transactions and to have decentralized trust that is not trust in any particular institution, but in the community trust, so to speak. And what we are seeing is that these decentralized cryptocurrencies are not working well, even in terms of their basic purposes. So I refer to stable coins. Stable coins work well as mediums of exchange precisely because they give up all elements of decentralization. They're issued by a particular agency that is also responsible for validating the transactions, and they are backed up by stores of fiat currency. So there is very little decentralization left here. And the point you make actually is a bigger one, because if we move to a world where we have CBDCs, where potentially we have stable coins issued by major corporations, such as say Amazon or Facebook, which is now called Meta and so on, we might move to a world where these sorts of stable coins and central bank digital currencies start dominating the payment space. So we might actually move to a world where there is even greater government as well as large corporation control over our financial, economic, and social lives. And that is a very worrying prospect. So ironically, the decentralization revolution that Bitcoin started off with might lead us to a world where there is even greater concentration in finance and greater concentration of economic power that lies in the hands of governments and big corporations.
You know, this really, I want to speak now then about inequities, right? India has tremendous inequities in digital access. Financial literacy also is very low in our country. Do you see CBDCs empower the bottom 100 million or 200 million in India?
I hope so, Meloni. That is the real hope. As you say, the point of these new financial technologies is to try and democratize finance. That is, give everybody in the economy, even very low-income individuals, easy access to digital payments so that they don't have to deal with, the loss or theft of cash. Give them a portal through which they can get access to basic banking products for managing savings, credit, risk, and so on. But there is a potential worry here that if people get carried away by cryptocurrencies, in particular by decentralized cryptocurrencies like Bitcoin, and see that as the path to economic salvation. As you pointed out, there are people with very low levels of financial literacy. In addition, digital access is not evenly distributed. So you might end up with these new technologies rather than democratizing finance and improving the economic futures of those at the bottom end of the economic pyramid, essentially further heightening inequality and creating even more risks for those who are least able to tolerate them. So I think while the cryptocurrency revolution has set off some changes that I think are ultimately going to be beneficial, it's going to be very important for governments and regulators to make sure that there are guardrails in place to ensure financial stability, market integrity, as well as investor protection, which includes increasing disclosure requirements for many of these products, making sure they are not misadvertised, and especially making sure that everybody who's getting into these products understands the risks very clearly before getting into them.
Professor Prasad, really there is a lot for governments, for central banks to think about. I want to now move to a quick rapid fire round, where we'll ask you a few questions related to the future of money, the future of finance, and you can choose to answer it in a line or a couple of words. So to begin, if you had to describe the future of money in one word, what would it be?
The end of cash, the rise of digital payments managed by companies as well as the central bank.
One radical technology that you expect will redefine the world of finance.
Blockchain technology.
Name one fintech innovation that excites you the most, given its potential to drive impact at scale.
So features such as smart contracts built on decentralized blockchains, I think, can have a truly disruptive effect.
Okay. And which form of currency do you expect will be most used in the next decade? Cash, digital, crypto, or CBDC?
a combination of digital and CBDC.
All right. So thank you so much for your time and for your responses today. I'm sure, there is a lot to think about in each one of them. And as you said, for the Indian government, for the central bank, it's very important how they manage this entire disruption in the payment space, how they go about managing CBDCs, and what is the kind of avatar it will take for India. That will be very interesting to watch. Professor Ishwar Prasad, thank you so very much for your time and for your expertise today.
Thank you very much, Miloni. I will realize that promise, but I hope we will get there. Thank you.
Well, that's it from all of us on day one of ET Future of Money Summit. Day two is even more exciting, with tracks on digital payments, focus on banking and wealth management, and a special Innovators Launchpad. I'm Miloni Bhatt, and from our team here, thank you very much for watching, and stay tuned for day two of ET Future of Money Summit.